It all comes down to the election.
The race in various battleground states are quite tight.
My base case is that you have Republicans with 52 seats in the Senate.
All the T's are crossed and the I's are dotted, and we will have an outcome on Wednesday.
We think we get a very clear result in the first 48 hours post-election.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowitz, and Anne-Marie Hordern.
Let's get this week started. Live from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now with 1 day to go. Going into a defining week for the global economy and financial markets worldwide. Equity futures on the S&P 500 positive by 0.25%. The fireworks is right here. The bond market's rallying. Chinese equities are doing okay. The Mexican peso is stronger, and it's one poll shaking things up over the weekend, showing Harris with a 47 to 44% lead in Iowa, of all places.
And it's by Ann Seltzer, who is one of the most respected pollsters who got both the 2016 and 2020 elections correct. There is a real question here about how much the tide has shifted to Harris. What you have seen in betting markets is that she now is basically 50-50 or even edging ahead of Donald Trump. Key question is, how much is this basically an excuse for markets to take off some of the risk that they had put on earlier, really leaning into the Trump trade?
And for markets, a bit of a reality check to where polls are nationally, which NBC over the weekend has it an absolute knife's edge dead heat. When you look at this Des Moines, Iowa poll, for every Des Moines, Iowa poll I'm looking at, what the Republicans will tell me, look at the Emerson poll, where Trump is up double digits in a place like Iowa. But then when you talk to Democrats, they don't think over the weekend, no one I spoke to thought Harris is winning Iowa. But what they said is this might be indicative, a capture of a moment of time, of individuals going to the polls in the upper Midwest. Potentially this helps her in neighboring Blue Wall State, Wisconsin.
Look at the moves in the bond market, Lisa. 2-year down 5 basis points. 10-year right now down almost 10 to 429. It's quite a move this morning.
Yeah, it also highlights how jumpy people are feeling right now and how little people actually want to lean into risk. There's a real question around how much polls are getting things wrong. Everyone kind of agrees that polls are not absolutely correct. Question is, which way are they going to swing? And nobody has a conclusive answer. There's also a question of exactly what the narrative is. And Michael Zezas over at Morgan Stanley said, beware the hot takes, because no one knows anything. And you can create a narrative very quickly that can be upended once we get the results. This, to me, feels like a market where nobody wants to be long anything, but everyone feels like they don't want to miss out on something, but there's no certainty whatsoever.
I will say this is a fitting way to end this election cycle. A surprise in November from this poll. Is it indicative when we look back, or is it not? Is it an outlier? How has this election cycle been? It's been unparalleled compared to any other in American history, given the fact that the top of the ticket on the Democratic side changed this summer, and the Republican nominee, former president, survived 2 attempted assassination attempts. We have never seen an election cycle like this one.
And it's potentially unprecedented when it comes to how close the polling has been so close to the election. I was looking back at races where you saw similar closeness, maybe Bush and Kerry in 2004, Bush versus Gore in 2000. But even there was more fluctuation. Reagan versus Carter in 1980 and Kennedy versus Nixon in 1960. These are the corollaries that people are looking back to.
NBC poll released Sunday. The race deadlocked 49. This is finally balanced. Equity futures firmer by 0.2%. Coming up this hour, we'll catch up with Priya Misra of JPMorgan Asset Management as Trump trades unwind ahead of Election Day. John Lieber of Eurasia Group as some U.S. polls begin to shift towards Harris, and Nela Richardson of ADP on the balanced U.S. labor market. We begin this hour with traders dialing back bets on a Trump win, with Election Day just 1 day away. Priya Misra of JPMorgan Asset Management writing, binary outcomes in the election is very close, so risk-reward is not great to trade. Some of the market reaction to 2016 was because a Trump win and a red sweep was a huge surprise. This time, we think that the move in the 10-year is to do with a Trump sweep being priced in. Priya joins us now for more. Priya, good morning.
Morning.
Would you say some of this move is just rebalancing some of the pricing around that story this morning then? Yields lower across the board.
I think so, but it's still not that much, because if you look at what happened after the payroll report, we had a weaker payroll report. Now, I'm saying it's still a normalization story with the job market. We saw, that very strong number the month before essentially being offset by what we saw last month. So, but interest rates still rose. I mean, we had the initial reaction of lower rates, which made sense. And then I'm scratching my head the rest of the day as rates rose, because I think the market said, well, it hasn't been about the economy. We're in a soft landing. Every market's pricing that in. It's all about what happens going forward. What's the policy risk? And I think that's why the market, those interest rates rose into the end of Friday. We're taking that back. I still think we're going to get a reaction whenever we know the outcome of the election. You're going to get a reaction either way, but it's not very asymmetric because I think we're essentially pricing in slightly higher chance of a Republican sweep. It's been coming down in the last few hours, but it's still, 55, 45, I would say, is how the market's pricing.
When the whole curve was south of 4%, the biggest risk was re-acceleration of the US economy. And whether policies that come out of this election contribute to that re-acceleration risk, do you think we can park that fear based on the numbers we saw on Friday?
I think from the economic momentum, yes. From the policy side, that's where the big question still remains. Now, I would argue, if you listen to the campaigns, you can potentially say that in any sweep, you can really get that re-acceleration because you can get, right from fiscal stimulus, wherever that fiscal stimulus comes from, whether it's spending or taxes. I would argue no administration has the kind of fiscal space or inflation space that existed in 2016. So I think they can try. And the market's going to say, no, not so fast. And I think interest rates are going to rise. I think, sub 4% 10-year is okay. You start getting 4.5%, 5%, particularly if it's real rate driven. 10-year real rates are close to 2%. It's extremely restrictive. The Fed believes it's restrictive. Now, but does the Fed keep cutting rates if you're going to get fiscal easing? Not so much. So, if I could fast forward for all our sake 6 months out, I would say, irrespective of the election outcome, we're not going to get significant sweep. But is that the administration inability to do it? If we don't get a sweep, or is it the market saying, no, not so fast, interest rates are going to reprice, and then that's actually going to put a lid on how much any administration can get done.
So is your argument that everyone's getting this wrong? That a Trump trade and a Harris trade both would not support risk assets nearly as much as people think because there isn't the fiscal space to really be expansionary in the way some people think?
Yes, I think so. I would say that irrespective of the outcome, you're not going to get that much fiscal stimulus because the market's going to stop it. Whether risk assets are okay, look at the fundamentals of the economy. I mean, soft landings are rare, and we've gotten that. I'd like to give the Fed some credit. I think starting to cut rates, suggesting that they'll continue to cut rates, that's part of it. The fact that households, companies did the right thing when interest rates were low, they locked it in. There's that savings buffer, the fact that the wealth effect is high. So I think the economy supports risk assets. Whether you're going to get that from fiscal, and I think we are going to, so let's say you don't get fiscal, and the Fed continues to cut rates, I think, we can actually maintain that soft landing.
So here's the question. At a certain point, you have to wonder going forward whether this actually is a moment that can change the trajectory of the U.S. economy. That's one argument that people have, that essentially look at the direction of markets and bet with it because momentum is your friend. Julian Emanuel talking about that yesterday. Is that your belief, too, that essentially this isn't as momentous moment as people think?
I think if interest rates rise too much, and I would say too much, we're pretty close to that too much point because of what's happened with 10-year real rates. So I think it is momentous if interest rates rise, because I think risk assets, the economy, we're all sensitive. This idea that the economy is not sensitive to interest rates, there are lags, and we know they're long and variable. I think we're at the point where enough time has passed with interest rates being high that if you do get a rise in rates, I think then it threatens the economy, it starts to threaten risk assets. So it's momentous if long and real rates continue to rise. If we stay around here, I actually think the soft landing can be maintained. Risk assets are fine. I mean, are we going to get 20% returns? I think not. But, I don't see a big correction if interest rates can just sort of hang in here. Now, I'm sounding biased, like I only care about interest rates, but the bond market matters.
It's okay.
Interest rates
I
do.
agree.
Priya, but you did mention if we were all sitting around this table 6 months on, talking about policy. Well, let's talk about the two big fiscal milestones. One is January 1, debt limit. We're going to hit that, and they're going to have to use extraordinary measures. And then at the end of next year, the Trump-era tax cuts expire, some provisions in that bill. How do you think Congress deals with this?
It's the trillion-dollar, multi-trillion-dollar question. So I would argue there is agreement. Both sides have an agreement that people making less than $400,000, those tax cuts should continue. Should not be allowed to expire. I think that's the easy one. The rest of it, people making more than $400,000, now that's where you need some pay-fors, and I think that's where it's going to matter. If you have a sweep, I think that gets extended. But if you don't, there is a decent chance that those tax cuts expire. I'm not going to say that, people like to pay taxes, but is the impact that high for people making $400,000? they have wealth effect. I mean, we're seeing a bifurcated economy. Monetary policy is not restrictive for people making, in the higher income bracket. If they have to pay more taxes, well, they've got wealth effect on in terms of what's happened with the market. I don't see that as being such a big economic impact. Let's say those tax cuts do expire.
Can we talk about the debt ceiling? It always gets done, but the past few years, the fights have gotten very intense.
Right, and if you have a divided government, it is going to be intense. Now, I would say the Treasury has extraordinary powers in terms of trying to extend it for a couple of months. Then we do get tax receipts. They can do things with bill issuance. I think we're looking at a summer time frame. And I do go back to 2011. In 2011, it was the last time we had such a contentious fight. We had a sequester put in place. Is that the way out? I think now the sequester actually, other than a year or two, didn't continue. But I can see Congress saying, let's put some sequester. Let's not allow spending to continue to get out of hand. We've got a long-term fiscal sustainability problem. And the market's telling you that. The curve is telling you that. So this might be a chance. I mean, I'm trying to find the positive here, that it's going to be messy, volatile. We'll all
Priya,
stress
this is
out.
new. What you're saying is new, that the bond market has the potential of acting as a regulating force on the ambitions of Washington, D.C. That's a fairly new phenomenon, isn't it? For America, at least.
Yes, we've not had the bond vigilantes in place for a while. But I would say with Fed funds at zero, it's hard for the bond vigilantes. Now, Fed funds, and even under the Fed scenario where they continue to cut to 3%, that's much higher than zero. So the bond vigilantes are coming out of the woodwork. You're seeing it globally as well. Look at the UK. We saw this with Liz Truss. We saw it again last week. You've certainly seen it in emerging markets. I would say the US is not immune. We're a little less vulnerable than the rest of the world because the dollar is still the safe haven currency. But I don't think we should take it for granted. I can't tell you if it's next year or 5 years from now, but the bond market's absolutely saying this is an unsustainable debt trajectory. You have to do something. Otherwise, interest rates will rise to the point where it chokes growth. And then, then I think Congress wakes up.
Priya, it's good to see you. We'll see you again this week. Priya Misra of JPMorgan Asset Management, with bond yields lower this morning. Vigilantes on the sidelines. We're down 10 basis points on a 10-year. 4.28. With an update on news elsewhere with your Bloomberg brief. Here's Danny Berger. Hey, Danny.
Hey, John. Security fencing was added around key locations in Washington, D.C. yesterday. The Washington Post reported that the Secret Service erected new 8-foot metal fences around the White House, Capitol, and the vice president's residence. District authorities are preparing for potential unrest following tomorrow's election. At a news conference, Washington's police chief said that he knew of no credible threats. Judy Dimon, the wife of JPMorgan's top executive Jamie Dimon, canvassed voters in Michigan over the weekend in support of Kamala Harris. Jamie Dimon, for his part, has declined to publicly endorse either candidate, pledging that he would work with whoever is elected. Judy is a longtime donor, though, to Democratic candidates and an education advocate. She's been more public in her support. According to Axios, she donated $250,000 to Harris and the Democratic National Committee. Ryanair shares are erasing their earlier losses, up about 0.5% in the European trade. The Irish low-cost carrier cut its passenger growth target for next year because of delivery delays from aircraft supplier Boeing. The company said its outlook is highly dependent on Boeing ending the strikes sooner rather than later and production ramping up relatively quickly. Ryanair CEO Michael Leary will join John, Lisa, and Anne-Marie at 8:15 a.m. Eastern. John, looking forward to that conversation.
Danny, thank you. As are we. In about an hour and about 30 minutes, 45 minutes, 2 hours away. OK, it's early days. 2 hours away. Thank you, guys. Up next on the programme, 1 day to go.
We stand on the verge of the 4 greatest years in American history. You watch. It's going to be so good.
And we will win, because here's what everyone here knows. When you know what you stand for, you know what to fight for.
That conversation up next. Live from New York City this morning. Good morning. I know I often sit here on a Monday morning and say, what a week, what a week. Park all of that. What a week. Election day tomorrow, Federal Reserve on Thursday, equity futures into all of that. Positive by 0.2%. This move in the bond market, Lisa, down 10 basis points on a 10-year. We all saw that poll over the weekend. I think we all thought the same thing. The bond market's opening up Monday with a bid.
And that's basically what you see right now, because in betting markets, you now see it flipped, where Harris has the edge at a time when that Iowa poll from Ann Seltzer showed that Kamala Harris did have a 3-point lead in Iowa, a state that has gone Republican the past 2 elections and a lot of people thought was in the bag for Trump.
Is it an outlier or the real deal? Under surveillance this morning, 1 day to go.
We stand on the verge of the 4 greatest years in American history. You watch. It's going to be so good. It's going to be so much fun. It'll be nasty a little bit at times, and maybe at the beginning in particular, but it's going to be something.
And we will win because here's what everyone here knows. When you know what you stand for, you know what to fight for. We have an opportunity in this election to finally turn the page on a decade of politics driven by fear and division.
So here's the latest. Trump and Harris making their final appeal to voters before Election Day tomorrow. Both campaigns targeting critical swing states as a flurry of polls project a tight race, with one poll in particular shaking up the conversation over the weekend. The Des Moines Register showing Harris leading in Iowa 47-44, as pollster Ann Seltzer says it's hard for anybody to say they saw this coming. Joining us now is Bloomberg's Akela Gardner, following Harris, joining us from Detroit, Michigan. Hey, Akela.
Hey, Jonathan. Yeah, Harris is in Michigan today, but she's going to spend the rest of the day in Pennsylvania, really focused on shoring up that blue wall. And Pennsylvania is the biggest of the 7 swing states that has the most electoral college votes. So it's really in the crosshairs between Donald Trump and Harris. But something that was really notable yesterday about her rhetoric is she's really focused on making an affirmative case for herself. She did not mention some of Donald Trump's comments about suggesting that he should be shot through the press, talking about guns trained on former Congresswoman Liz Cheney. And she has really spent the past couple of days holding regular gaggles with reporters, really with that contrasting message. She did not do that yesterday. She was really focused on her swing state travel. So her advisor tells me she's really starting this the way that she's really finishing this, I should say, the way that she started it, really making an affirmative case for herself, telling people about her policies. And that is something that I've heard from voters, that they really want her to focus on the quote unquote joy that she talks about on the trail. People know about Donald Trump. This is sort of already built into his character when it comes to people who have voted for him. And you heard her talking in that clip before about how Donald Trump has run for almost a decade now. She's been in this race for only 3 months, and yet she says momentum is on her side.
Akela, what's the team around her saying about that Iowa poll? Do they have some hope that potentially she could flip this deep red state?
I don't think Democrats are paying too much attention to this Iowa poll, but really what they're hoping is that it could have some suggestions for other swing states, particularly in the Midwest, that maybe Harris could be performing better with moderates, with white voters. So that's really what they're watching here, is potentially the spillover in those 7 battleground states, and particularly the blue wall, which most strategists say is her best path to 270 electoral votes, which she really needs if she can get Michigan, Wisconsin, Pennsylvania, and that electoral college vote in Nebraska. That's really the path that they're focused on right now. And I think most polls show her performing better there and Trump performing better in those Sun Belt states.
Akela, appreciate the update. Akela Gardner there of Bloomberg News, leading the coverage of the Harris campaign. John Lieber of Eurasia Group joins us now. John, I can tell you, and welcome to the programme, this bond market seems to be paying attention to that Iowa poll. Are you?
Yeah, absolutely. I mean, that poll was a real shocker. It shows Harris up in a state that has been trending steadily to the right over the last couple of years. And honestly, it's a plausible result. It's an outlier. It's the first one that's shown Harris with a lead in Iowa. But Iowa is not as red as it looks. It is a more moderate Republican state. Obama won it in 2012, and it's really only during the Trump era that you've seen the rural parts of Iowa flip strongly to Republicans. But it's possible that what we're seeing right now is a bit of a realignment. And in the areas where Harris was particularly strong in that poll was with women. Iowa passed one of the more restrictive abortion laws in the country with a 6-week ban on abortion access. And there's been the subject of a endless flood of ads in the state over the last several weeks. So the idea that this could have shifted in Harris's way over the course of this campaign, where Donald Trump's on the ballot now for a 3rd time, and some Americans are clearly tired of this guy, is actually totally plausible and a very bad sign for the Trump campaign.
At the same time, over the weekend, Emerson College had Trump up 10 points in Iowa. With all of this conflicting data coming at you, how do you make sense of this all ahead of tomorrow?
Yeah, it's tough. I mean, and there's a lot of conflicting signals, most of which are showing this to be a tie or toss-up race. The one thing about the Seltzer poll is that if you look at her track record over the last 20 years, she's almost nailed the margin in Iowa. And the Emerson poll, no disrespect to them, they just don't have the same track record in the state. So I'm not convinced that Harris is going to win Iowa. That would be indicative that this is a true political earthquake, and she's on track for a massive electoral college victory. But I do think this is a poll that you have to take seriously and provides the clearest signal yet. We've seen that this race is not, in fact, a toss-up, but is one that would favor Harris, if it's true.
This poll could be indicative, though, to the upper Midwest, especially white women. Do you think this puts her in better position than Donald Trump in a place like Wisconsin?
Yeah, Wisconsin's demographically very similar to Iowa. It just happens to have Milwaukee tacked on to its eastern side. And I think that means that the rural parts, if again, this poll in Iowa, if it's true, is an indication that the rural parts of Wisconsin, potentially the rural parts of Michigan, are moving towards Harris, being led by women. You look in the poll, in the Iowa poll, 51% of Harris voters said that defense of democracy was their top issue, and about a quarter said that abortion was their top issue. I think defense of democracy kind of codes as I just want to vote for Harris because I don't like Trump, but that abortion issue is a huge turnout driver. And again, Iowa is unique. Wisconsin does not have the same abortion law that Iowa does, but I think that there's at least a good possibility that these results are correlated, showing Harris with potentially much more strength in that Rust Belt corridor than other polls are showing her.
John, tomorrow is not election day. It is the end of voting. And that's essentially what we have seen pretty consistently is almost half of Americans have voted versus the total that voted in 2020. What can we glean from how many people voted early? And does that give us any sense of who has the edge?
I don't see a lot of signal in the early vote. I think it does show enthusiasm, but it also shows that people are gravitating towards early voting. I voted early in this cycle, first time I've ever done that. And I think it's a growing trend, particularly in the Sun Belt states, Nevada, Arizona, Georgia, and North Carolina. You are seeing people adopt this more and more. I mean, it does show a lot of enthusiasm. We could potentially get turnout levels that rival the 2020 turnout levels when about 2/3 of the country, eligible voters, showed up to vote. But I don't see a lot of clear signal of vote preference. In fact, the only place where you might be seeing a clear signal is in Nevada, which looks like it's trending towards Donald Trump right now. Other than that, it's mostly Democrats still prefer the early vote, so you would expect them to be doing better in the early vote, and that's basically what it seems like you're seeing right now.
John, Eurasia Group has basically been saying that Trump has a small advantage and that most likely the House will go with the top of the ticket. The Senate, a lot of people think, is most likely going to turn red. Do you still feel that way? Or have some of these last-minute polls changed that view?
Yeah, this polling over the weekend really challenged our view that Trump is the moderate favorite. And, I think for structural reasons, I still see him as being slightly ahead here. Harris is the vice president to an unpopular administration. The top issues are still immigration and the economy in most polls, but there's a very plausible path for Harris to win this thing. I'm feeling much worse about my conviction about Trump, which was already very low this morning than I did on Friday morning.
I think the bond market feels the same way, John. We'll leave that there. It's good to catch up with you, sir. John Lieber there of Eurasia Group. I want to keep returning to this move in the bond market. Yields down by 10 basis points. No big data points this morning whatsoever. So this is off the back of the weekend's news, according to a lot of people. Priya Misra of JPMorgan made the point about 20 minutes ago that half of the move over the last month or so was down to Trump potentially winning this election and leading potentially to a red sweep. And Lisa, much of that move was independent of the polling that we'd seen, which had indicated that this race was still very, very tight. That poll over the weekend, whether you believe it's an outlier or not, it's enough for a lot of people in this bond market just to say, OK, let's rebalance things just a little bit going into tomorrow night.
How many no's did you get over the weekend? Red flag, red alert. Hold on. This actually is something you need to pay attention to. This pollster has gotten it right for every single election going back a long time. You got to sit up and listen, and the market's on the wrong side.
It spooked some of those bond shorts just a little bit. Yields are down 10 basis points on a 10-year. We're down 5 at the front end of the curve. Up next, Nela Richardson of ADP on the state of the US labour market going into election day. The first back-to-back weekly loss on the S&P 500 going back to early August. We're looking for a bounce. We're up by a little more than 0.1% on the S&P 500. On the Nasdaq, up 0.1 on a Russell, the same amount. In the bond market, This is where your attention is this morning. Down at the front end by 5. Down at the long end by 10. The 10-year 428.27 after a move of a little more than 14 basis points higher last week. Even with that noisy downside surprise on payrolls, we take 2/3 of that move back just this morning in the last few hours.
So here are a couple of questions to ask around this. Yes, a lot of people are tying this to the poll over the weekend, giving Harris the edge in Iowa. A bigger question could be, what exactly is a Trump trade and what exactly is a Harris trade? How much could these 10-year Treasury yields or 2-year Treasury yields rally if Harris does win? Or is this a knee-jerk response to de-risk after all of the sell-off that you've seen in 10-year yields? On the flip side, how much do you see yields increase if Trump wins and say the composition of Congress is somewhat different than what people expect? These are the questions that people are mapping out for election night when they stay all night up with caffeine and others.
Is that what we're doing on Tuesday night?
I'm just suggesting that there are a lot of people who are going to be very grumpy on Wednesday, regardless of who wins, because they won't have slept and they will feel like their bodies are failing them.
Might be a few of those sitting around this table. I'll try and answer that question. I'll try and answer that question. What is a Trump trade? I'll show you a Trump trade in reverse. Dollar Mex, intraday. A 1% move in Mexico's favor. That is a stronger peso this morning.
Yeah, a lot of people say that weak peso, short peso, is a key trade for the Trump potential victory, since any tariffs on Mexico could potentially really hurt that country. It's the reason why it's one of the favorite pairs. Long dollar is another one. Long Bitcoin. Long Trump entertainment and technologies.
Short bonds.
Short bonds. I mean, these are some of the trades that you see coming out. And the question is, will they hold past that knee-jerk reaction?
I'll be looking for the financials as well around the opening bell in about 3 hours' time to see how that sector performs. Equities then up by 0.2%. Big bid into the bond market. Under surveillance this morning, the latest polls signal a tight finish with 1 day to go until Election Day. Harris gaining some ground. The final poll from ABC News and Ipsos giving her a 49 to 46% edge nationally. A New York Times Siena survey showing Harris ahead in 5 of the 7 swing states. And I think we've still got to talk about that big outlier, because it is an outlier. The poll from Iowa over the weekend.
Absolutely. It has Harris up for the first time. This is a state that in that poll, when they conducted over the summer and in September, Trump was ahead. The Democrats I'm speaking to over the weekend are saying, look, we do not think she's going to win Iowa, but what they want to glean into is the fact that maybe this does signal that Harris has strength, especially among white women in the upper Midwest, a neighboring state like Wisconsin. That's what they are taking away from this poll. And then when you listen to Ann Selzer speak about the poll over the weekend, she's saying that where she really saw a bright spot was not just with women, but women over 65. And this is a cohort of the electorate that comes out to vote, and they come out to vote early.
Honestly, I'm really curious to see how much she continues to be scrutinized by both sides in terms of her accuracy. How many notes this morning? She tends to be lucky, not necessarily always right. Nonetheless, what this highlights to me is that everyone expects the polls to be wrong. The question is in which direction and why, because they're all based on models, and so they all have to make some assumptions. And the key issue is you can't really make assumptions, especially with someone who has not been tested. And I'm talking about Kamala Harris, who is very new to the race.
And Republicans and allies close to the former president are saying to me, well, Ann Selzer had Donald Trump winning the primary in Iowa in 2016. But he didn't win the primary in Iowa in 2016. Ted Cruz did. So obviously everyone's going to be poking holes. But I think what you want to view into this is that this is someone that is respected. And Democrats definitely view this at the end of the race, something that is shifting momentum ahead of tomorrow.
Something that's shaking up this market as well. Need to point out what's happening with the commodity market too. Crude is up by more than 3%. We're higher on Brent, higher on WTI. Iran is planning a strong and complex attack on Israel. The Wall Street Journal saying Iran isn't planning to limit its response to missiles and drones, citing Iranian and Arab officials.
So also we heard from the Iranian Foreign Ministry spokesperson today saying we will utilize all our material and, quote, spiritual resources and every available means with full strength in our response to Israel. They say that they are planning a counter strike. Now, we've heard this before, and there's even some reporting that maybe this would come before the U.S. presidential election. I don't think Tehran is going to make that move ahead of a very consequential presidential election when, if you look into how the Biden administration viewed Tehran, how the Trump administration already governed in the past, according to Tehran, you would think that they would actually want a continuation of the president instead of going back to a Trump administration. But What the Wall Street Journal says is that there's going to be a response at some point.
Yeah, and a lot of people are wondering whether the U.S. gets involved if there is a response pretty directly, especially because the U.S. came out and said, listen, we restrained Israel the first time around. We're not going to be able to do it this next.
Brent crude is back at 75.31. Elsewhere, Chinese lawmakers are gathering in Beijing to sign off on a fiscal package worth trillions of yuan. The meeting is expected to round out the country's largest effort to lift growth since the pandemic, but it may be months before detailed plans to support consumption emerge. And we're all wondering how election-dependent that decision might be.
I love that this meeting starts today and ends Friday. I mean, that tells you everything that you need to know. They start discussing the potential options, and then they figure out who wins, maybe.
Tomorrow there's a watch party.
Right, exactly. Tomorrow there's a watch party, and then they figure out what they're going to do. The issue is people don't expect them to really come out with as much as the market currently needs. The two prongs are going to be supporting the housing market and propping up consumption among consumers to some degree, but they have shown a reluctance to do this because of two things. First of all, very hard to see who exactly needs it and has actually the willingness to spend it then on the discretionary side. And then two, whether they financially can. And that's another issue that really a lot of people are wondering about.
My question about the fiscal stimulus, is it going to boost or stabilize growth right now, what you're seeing in China? About the politics of this, maybe they need to extend this meeting past Friday after listening to officials like in Maricopa County, which is saying we're going to need to 10 to 13 days to count all these ballots and explain to you who won Maricopa County, which is 60% of the vote in Arizona. I'm not sure by Friday Beijing is going to have an answer.
It's going to be a long watch party. Stronger Chinese currency this morning. Traders bracing for a busy week with the economy once again at the epicenter of this year's election. Nela Richardson of ADP writing, much has been said lately about inflation and consumer discontent, but workers are singing a different tune. For the past 2 months, people we survey are feeling more loyal to their employers and more engaged in their work. Nela joins us now for more. Nela, good morning.
Good morning.
Now, I would sit here and say, is that because they're worried about losing their jobs? So they're saying, I'm more committed, I don't want to leave you, I'm more loyal to you, I want to hang around. What is this really about, in your opinion?
It's about the fact that employers have shown up to keep their workforce. We saw all of that turnover in 2022 and 2023. The quits rate soared. You don't see that turnover now. The quits rate has become the big stay. People are more engaged than they have been in our survey over the last 3 years, and they're trying to make it work with their employers. Engagement, the way we measure it at ADP, means that you're also more productive and you're less likely to work. So it's not just fear of a layoff. In fact, if you look at initial jobless claims, that layoff fear is actually not in most employers' handbook right now. What it's about is that the workforce is feeling more confident than they have over the past 2 years.
Does that speak to some resilience, maybe, in this labour market for months to come?
I think they've seen their real paychecks go up. And let's not underestimate the cost of inflation on the worker over the last 2 years. So getting real income, seeing some actual opportunity in career, that's another part of this puzzle. We're seeing, especially young people are getting promoted at a faster, they're actually being promoted at the same rate as boomers. There's more boomers who are managers, but Gen Z is making inroads. So the complexion of the workforce has changed, and it's changed finally in the workers' favor, and they're feeling it.
So why do you say that it's unlikely that pay and pay increases is going to be a source of inflation going forward?
We're seeing pay trend down. This is an economy, and I've said this before in the show. It's a murky picture with the government data, but ADP was pretty clear. We saw strong growth across several sectors, but we also saw pay growth continue to decline. What does that mean? Well, for workers, real wages are still growing, as we just discussed. But for firms, it also means that they don't have to bump up pay to get that talent the way they used to. So we're seeing basically labor shortages that have plagued this labor market over the past 2 years. They've all but disappeared. At the same time, pay growth is decreasing, not likely to trigger another round of inflation.
I guess the logical question then is how primed is this market to either an upside swing or a downside swing? It seems like it's evenly balanced, as you're talking about, and yet here we are at a pretty momentous week on two fronts. We have the election, which we've been talking about, and we have the Federal Reserve on Thursday, which we also have been talking about, and a real question about the more that they cut. Does that push this market more to the potential way of seeing more inflation, particularly when it comes to wages?
Well, when you look at it is a murky picture after that jobs data that we saw. But if you take the totality of data, it is clear this is not a perfect economy, but it is a growing one. And that cannot be underestimated with all the narratives about recession, soft landing, hard landing. I think this is an economy that has stuck its landing. So as we move into this week of a momentous events, we actually know that the economy is in good standing. And that is a pretty good start for any administration and for a Fed rate cut. So they have a good setup.
Nela,
for whatever decision happens this week.
Who do you think holds the leverage right now? Is it employers or employees?
It's more balanced than we've ever seen. I'm of the belief, because I'm old school, and you know this, employers always have the leverage. I mean, they decide the paychecks, they decide the tenure. Most of us are at-will employees. Most of us don't have long-term contracts.
At the moment, though, Boeing doesn't seem to have the leverage.
There are always exceptions to the rule. But I think we're seeing more balance between workers and employers than we've seen over the last 3 years. It is a balanced labor market.
You said going into this election, going to the Fed meeting, going into next year, depending on what the administration is, they're set up for a good economy. What makes you so nervous about 2025 and the labor market? Is it the immigration story, or is it things like tariffs that potentially could mean higher inflation?
I'm really worried about the manufacturing sector, and I have been. This is a sector that has not really rebounded, even with this latest Fed rate cut. It's a sector that there has been some policy and investment in with actions coming out of the Biden administration, but you're not seeing it translate into job gains. The survey evidence still looks downbeat, and it picks up a trend that we saw before the pandemic when the sector was shedding jobs. So going into 2025, I think our goods sector needs a look at. It's still ailing, and we can't say it's really a pandemic cause anymore.
I'm going to form a union for broadcast anchors. Do you want to get on board?
Well,
We'll
all I
make that
know,
happen.
did you read that the New York Times tech staff is going on strike on election night?
Is that what they're doing? I didn't know that.
Potentially. And that basically there's this real question of whether they could gum up the system at one of the most high traffic moments for them. So, arguably, if you want to go on strike, carpe diem.
Show your leverage, right? Nela, thank you. It's good to see you. We'll come for advice for a little bit later. Nela Richardson of ADP. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Here's Danny Berger. Hey, Danny.
Hey, John. Oil prices are jumping this morning, nearly 3% for crude, 3.2% for NYMEX crude. OPEC Plus agreed to push back its December production increase by 1 month. Meanwhile, tensions are heightened in the Middle East again. Iran escalated its rhetoric against Israel, warning of a, quote, crushing response. The Wall Street Journal reported that Tehran told its allies an attack would come after Tuesday's U.S. presidential election, but before the January inauguration. It wouldn't be limited to missiles and drones, unlike the prior strikes. Burberry shares, those are on the rise in the London trade, 6 1/3%, following a report that Moncler is said to be eyeing the company. According to online fashion publication Miss Tweed, Moncler may bid for the British luxury retailer in hopes of creating an outdoor specialist giant. Industry sources say that LVMH boss Bernard Arnault, who recently invested in Moncler, is in favor of a deal. And one of the greatest forces in pop music history has passed away. Legendary record producer Quincy Jones died at the age of 91 at his home in Los Angeles. Jones rose to prominence arranging jazz productions in the 1950s before collaborating with the likes of Frank Sinatra and Sammy Davis Jr. He went on to produce the most successful albums of Michael Jackson's career, including Thriller, which remains one of the best-selling albums of all time. Jones's career lasted more than 70 years and includes 28 Grammy Awards, along with an Oscar, an Emmy, and a Tony. A real loss. And that's your brief. John.
Danny, thank you. The word legend has lost its meaning over the last few years. Not there. That man was one. Up next on the programme, prioritising America's economy.
The president has the right to impose the tariffs on these countries that have been hurting us. They've really been hurting us.
Doing the work of investing in American industries, including our industries of the future. That is the way we are going to win the competition with China for the 21st century.
That conversation up next, live from New York. This is Bloomberg. So you're familiar with the Trump trade. You get short bonds, you get long the US dollar. We're rebalancing some of those trades this morning, that's for sure. Going into election day, got a bond market that's getting bought, yields are lower by 10 basis points, and in foreign exchange, the dollar is weaker against everything in G10. including the euro dollar, Lisa, 109.10.
Yeah, well, it seems to be a big readjustment after a real Trump trade that absolutely plowed into the markets over the past few weeks. Question is, are people just taking their chips off the table? Are people actually leaning into this poll in Iowa over the weekend that seemed to put Kamala Harris ahead? How much more do we have to go? We've been asking that. In other words, how big could some of the swings be if we do get a definitive result, on Wednesday?
Big if, but a big move. The Mexican peso, a whole lot stronger this morning. Under surveillance this morning, prioritizing America's economy.
The president has the right to impose the tariffs on these countries that have been hurting us. They've really been hurting us. It's so ridiculous. They end up closing. Everybody loses their job.
Doing the work of investing in American industries, including our industries of the future. That is the way we are going to win the competition with China for the 21st century, and that is the kind of leadership that America deserves in their president.
So here's the latest. Harris and Trump promising to fight for a better economy for Americans as polls consistently show any lead within the margin of error. Citi's Beata Manthey navigating election scenarios, writing, a global equity strategy for Trump is premised on a stronger dollar, rising rates, trade policy uncertainty and a value rotation. A Harris strategy is premised on a weaker dollar, lower nominal yields, potential tax hikes and a general tilt towards climate-friendly policies. Beata joins us now for more. Beata, welcome to the programme. Given the polling over the weekend, how are you advocating for what clients should do? What are you telling them about how to navigate the next 48 hours and beyond in markets?
Good morning. Thanks for having me. So to us, within the equity market that I cover, the biggest, the most important call for the Trump win has been, of course, overweight the US versus the rest of the world. And just like all these macro trades that you've been talking about through the morning, stronger dollar or higher yields, this trade has also played out substantially. So at its peak, it's been 7% higher. There is a sense of the market taking off a bit of this profit, so it's up 6%. I would argue a lot of Trump win is still in the price. And that performance, of course, means that positioning is very stretched on the US versus Europe. In fact, it's one of the most stretched on relative basis positionings we've been having since the pandemic. So there is a very bearish setup of the investors going into the election day. And as Paul suggests, anything can happen.
Well, let's talk about Europe. I'd love a European perspective on this, how nervous European-based investors are about the potential Trump victory. And are they rethinking their domestic European allocations to equities because of it? How is their approach changing?
European investors and global investors have been very, very nervous about the allocation into the European equities, but that has already started around June with the political risks of French election, earnings for Europe coming off substantially, China worries, right? So we've entered this pre-election period with a lot of bearishness, a lot of underperformance, actually underlying EPS recessions for many cyclical sectors in Europe, which leaves us in a very interesting setup if Trump was not to win. Again, polls are 50-50, we really don't know, right? But the way I think about global equities, it's the US versus the rest of the world equities. And what is certain, and investors really don't argue with us about that, that within this rest of the world equity allocation, Europe looks most interesting right now because it's been so beaten up beforehand. So everything in equities is about changing balance of risks. And this balance of risks has been improving from very low levels, hasn't shown up in the performance right now. But should Harris win, that's definitely a very positive trigger for the rest of the world and Europe in particular. But on the other hand, if Trump wins, a lot of that trade has been already played out in Europe. Perhaps of Trump trades, continental Europe looks less attractive, but within the European equities, the UK, which tends to be more defensive and has a lot of energy weight in it, So FTSE 100, I'm talking about, this is the one that looks more interesting to go after if Trump was to win, and it hasn't played out yet.
There is a lot to unpack there, and I want to just go to what you expect in the immediate aftermath of us getting some sort of result from the election, because a lot of people are going to be up all night at their desks trying to figure out how much volatility there is and how they should play it. Are you saying that if it looks like Harris is winning, you could see a massive migration away from U.S. equities into European equities? Is that your base case?
The base case, yes. The rest of the world would outperform the U.S. equities should Harris win. And in terms of the volatility, of course, as the Trump trades have moved so fast, so quickly, investors have been anticipating higher volatility. That has been already playing out, especially last week. Volatility is on track. Historical trends in pre-election. So it is playing out, but I really think investors are in a sit and wait mode we are so close to the results that they'll take action once we have the results.
Yeah, well, Beata, there is this sort of fly in the ointment, and this is something a lot of people have pointed out, which is typically momentum tends to continue after an election, regardless of who wins. And then there's also the sense that if you look at fiscal stimulus, if you look at deficits, the trend is the same across the world, regardless of whether it's the U.S. or whether it's Europe, with the exception of Germany, which dances to its own music. I mean, how much are we talking about a world that is looking to stimulate cut rates and do the same thing, so it kind of leaves everybody in the same place?
Absolutely, and that is a very fair point that you are making. So election is an important event, but it is about everything else as well that will push equities higher or lower in the months to come. And one thing is certain, that yields will stay higher. Rates, despite the cuts that we have on the forecast, will still be high for longer. And if this trend of the economic surprises around the world continues, positive surprises continues, this would be an interesting setup for this improving balance of risks, where the rest of the world's equities versus the US should be better positioned.
Beata, wonderful to hear from you. Appreciate the perspective on the other side of the Atlantic. Beata Manthey there of Citi. We'll keep coming back to this bond market move. At the long end of the curve, we're down 10 basis points, 427. One of my favourite commentators, Connor Sen, out this morning saying this: 10-year yields down 10 basis points this morning. If you're pricing a mortgage today, thank Anne Selzer. So let's talk about who Anne actually is. If you're seeing these moves and waking up this morning, what do you need to know about that pollster?
Well, she's a highly regarded pollster. She's been very correct on presidential elections. What people are caught off guard is the fact that this is a state that Trump won in 2016, 2020. Cook Political Report has it as solid red, solid Republican for this time around. When you ask Republicans about her, they will point to calls she got wrong. And they go back to the 2016 primary, where they had Trump winning that primary, but actually Ted Cruz won that primary. The thing that she's drawing out here that a lot of Democrats are holding on to is Harris may be doing better than women, especially women that are 65 and older. They are coming out to vote, and they come out and vote early. Maybe it doesn't show her winning Iowa, but maybe it shows strength in the neighboring Wisconsin.
It's enough to rebalance positioning this morning, down 11 basis points now on a 10-year yield. Up next on the programme, we'll catch up with Ed Yardeni of Yardeni Research, Tom Bonier of Tara Group, Dan Niles of Niles Investment Management, and Lindsey Piegza of Stifel. From New York City, the second down with Bloomberg Surveillance, just around the corner.
Chance of blue sweep, just looking at polls, seems a lot lower than a red sweep.
The market will start to suss it out, depending on how ballots are coming in some of the key swing states.
The election is going to have, from a top-down macro perspective, three key policy implications: tariffs, immigration, and fiscal policy.
I don't think any of us really expect any meaningful changes in policy until the first quarter, second quarter.
We think, checks and balances remain in place on whoever gets into that presidential seat.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowitz, and Anne-Marie Hordern.
Let's try and frame this. The eyes of the world and financial markets worldwide, looking at 7 swing states a handful of counties, maybe a couple of 100,000 voters in the United States of America, and the decisions of those individuals over the next few days could totally reset and reshape expectations in financial markets and the global economy for years to come. That's what it comes down to. Really small margins, big waves off the back.
If you are in Japan, you are learning about Maricopa County and Arizona, and you're going to figure out exactly what you need to know about it because it could sway the election. Here's the key issue. This is actually a unique race. As much as we have seen counties and specific areas really determine the race in the past, this is potentially unprecedented in the nature of closeness of these polls, question about the accuracy, but a real issue, will we have a result? And we keep having to ask that even if the market seems to have moved on.
Let's go through the markets. Equity futures right now positive by 0.2%. Similar move on the Nasdaq. If you get into some of these Trump trades, they're rebalancing this morning. So you've got a big bid into bonds, yields lower by 10 basis points. The dollar's stronger, the peso, or rather the dollar's weaker, the peso's much stronger. Dollar MEX with a move of 1.3%. Asian equities doing okay in the mix as well. You said Japan's getting to know Maricopa County in Arizona. I would say global markets getting to know who Ann Seltzer is over the weekend.
Ann Seltzer, Davenport, Burlington, cities in Iowa, with this report coming out over the weekend saying that Harris is actually ahead of Trump in Iowa, a state that Cook Political Report has said this is solid red. Now, I spoke to everyone over the weekend. The Republicans and allies of the former president, they say, look, this is an outlier. Ignore this. They point to the Emerson poll that had Trump up double digits. But our John of Eurasia Group came on earlier, John Lieber, saying, actually, I think Ann Seltzer is better. And people do say she is this famed, notorious pollster, and her prior polls had Trump up. So what she said over the weekend, this is capturing a moment. And she's talking about women north of 65. And Democrats are saying maybe she doesn't win Iowa. But this gives hope that maybe she wins Wisconsin, and this maybe is a better bellwether for some of those blue wall states.
You're enjoying your weekend, you're short bonds, you're long the dollar. It's been doing pretty well over the last month. That poll drops, and you rethink things just on the margin.
Just let's set the stage. I don't think anyone was enjoying with any kind of complacency any of the trades they'd put on. Didn't seem like anyone's been enjoying this, who's been coming in, except for maybe one person who came in and said, yeah, this is what I live for. Other people are saying we have no edge. This is just an edgeless market. At a certain point, what it shows you, though, is how jumpy people are. I got a lot of notes in my inbox from traders, mass emails saying, hey, listen up. This is a big deal. You got to reassess this. This is going to make really big waves in the market on Monday.
Where the candidates are today, I think, also says a lot. So Kamala Harris is not leaving Pennsylvania today. The entire day. Allentown, Philadelphia, she's staying put. New York Times Siena poll over the weekend says Trump erased her lead in Pennsylvania. So they're trying to shore up potentially some of the maybe early voting they're seeing that maybe is going to Trump's favor. Where is Trump today? 3 swing states. Pennsylvania, North Carolina, and Michigan. Over the weekend, the New York Times Siena poll showed Harris had new strength in a place like North Carolina. There's really no path to 270 for the former president if he is unable to maintain that control of North Carolina.
He's been traveling so much, seemingly forgot where he was at one point over the weekend. I think he was in North Carolina and thought he was still in Pennsylvania.
Yeah, he said it's great to be at another city in North Carolina, even though he literally only just got to North Carolina 20 minutes ago.
And shouted out to Dave McCormick in the crowd, right? You see that? That's where we're at. If I traveled that much, I'd feel the same way.
And honestly,
I'd feel the same
there
way.
was an article about the snacks that they like, and it was really illuminating.
Oh, we're down to that?
Yes, absolutely.
Okay.
People are looking for things to talk about because we're kind of running out.
I don't think we're running out of anything. Yields are down 11 basis points on a 10-year this morning. On a 2-year, we're down 6. Coming up this hour, Ed Yardeni of Yardeni Research as the rally stalls ahead of the election. We'll catch up with Tom Bonier of Tara Group on the electorate shift in Harris's favour through voter registration, and Dan Niles of Niles Investment Management on his favourite Mag 7 names. We begin this hour with stocks on hold ahead of tomorrow's presidential election and Thursday's Fed rate decision. Ed Yardeni of Yardeni Research saying we expect that the S&P might go nowhere fast over the rest of this year, hovering around 5,800. The outlook for fiscal policy and will probably remain unsettling after the election, and the Fed might not lower the federal funds rate over the rest of this year after all. Ed joins us now for more. So Ed, let's get into that. Why do you think we might be on the bumpy road to nowhere?
Well, I think the polls are probably going to be wrong. Right now, the polls are saying neither one of them will win because it's too close to call. But somebody's going to win here, obviously. On the other hand, the polls are suggesting that we could have a contested election, and those can be pretty nasty and last a while. So I wouldn't dismiss the possibility for that. And I think that could create uncertainty, certainly about what fiscal policy is going to be up in next year. In addition, we've got geopolitical risks still out there. I think the Israelis and the Iranians are waiting to see who wins to decide what they're going to do next against each other. And then meanwhile, the bond vigilantes are back. I know that the bond yield is down 10 basis points this morning, but it's still up 60 basis points. And that's basically offsetting the 50 basis point drop that the Fed gave us on September 18th. The bond market is saying no mas. The bond market is saying we really don't need any more rate cuts.
Just to pick up on the bond market move, would you say, in your mind, from your perspective, and there's still some debate about this, that the bulk of the move over the last month, yields higher, has been about potential policy changes in Washington?
I think they've actually been more about the economy and the Fed. We expected that some of the weakness in the bond yield back in August and early September was misdirected, focusing on the weak economic indicators. And we pointed out that there was a lot of weather issues or strike issues. And sure enough, the Citigroup Economic Surprise Index went from negative to positive. I know the payroll employment number was weak on Friday, but I think that number was totally useless. Even the BLS, Bureau of Labor Statistics, said that they don't really know what weather effects impacted payroll employment.
At this point, you said that the bond vigilantes are back and that they're a big component of what's underpinning some of the move that we've seen in the yields before today, maybe. I am wondering what you think could happen with the auctions this week. The Treasury Department is bringing forward a bunch of different bond sales, 3-year today, 10-year tomorrow, in a 30-year auction on Wednesday at 1 p.m. How concerned are you about a real messiness on the heels of some sort of result that could potentially really spook the bond market?
Yeah, well, that's the issue we really have with regards to all this debt is it does get tested on a regular basis in these auctions to see whether investors are willing to pony up and buy these bonds at rates where they are today. Last summer, August, September, we had some messy auctions that led to a mini debt crisis from August, September, and October, going from 4% to 5%. And here we are. I don't know that this is a debt crisis yet, but it certainly is a challenge to the Fed. Fed officials really have to recognize that while they are easing, the Fed is tightening.
There's a political overlay.
I mean, the bond market is tightening.
Oh, yeah, well, that's actually where I wanted to go. So basically, you've got the political overlay right now of who's going to win and the deficit that's going to expand either way. It's just a matter of whether it's going to expand by $3 trillion or $8 trillion. And then there's a question of, how much the economy is stable. And then the third question, which you raised, is, did the Federal Reserve make a mistake when they cut by 50 basis points? You argue, on some level, the long end of the bond market and the tightening in financial conditions is a sign that they did. Do you think that should really affect the decision on Thursday?
Well, in addition to the long end being up 60 basis points this morning from its low back in September, we also have the 2-year ups at least 50 basis points. So it's not just the long end that's up, it's also the 2-year, and that's the whole yield curve has shifted upwards. And I think this is an indication from the fixed income markets that the Fed eased too much too soon. I think if they did 25 basis points, the market wouldn't be reacting quite as radically as it is right now. But they did 50. And in addition to that, they signaled that they think they're in a monetary easing cycle and that they're going to go down to 2.9% on the Fed funds rate over the next couple of years. And the fixed income markets are saying that's not necessarily the case because the economy has actually been remarkably resilient and may remain resilient. And while inflation is almost down to target, there's still some sticky areas of inflation. And if we have some of the more volatile components of inflation go back up, then we could have an inflation problem again because the service is sticky.
Ed, when it comes to the election, can we do a little bit of scenario analysis? We know that the bond traders are looking at what's going on in this Des Moines, Iowa poll. But if Harris were to win, say that poll is correct, how much more of a recalibration can we see in the bond market?
Well, again, I'm not convinced, as everybody else seems to be, that a lot of what's happened in the bond markets related to the election. People have shown charts of the poll showing that Trump's chances of getting elected have increased, and they've superimposed the 10-year bond yield on that and said, see, there you can see the correlation. I see a correlation between the bond yield and the Citigroup Economic Surprise Index, and that's really continuing to work very, very well. So,
but Ed, what do you give the last 24 hours the move to? What data?
Well, that does confirm that, but let's see. I mean, that's
so it is just politics.
Well, today is, but I don't think that's been the case since September. I think, look, as you know, there's a lot of moving parts here, and I'm not going to tell you the politics hasn't been an issue for the bond market. But again, I think the bond market recognizes that whether it's Trump or Harris, as Lisa said, we're going to have larger deficits no matter what.
Ed Yardeni, if you had any research. Ed, great to catch up. Big moves this morning. 10-year yield down by more than 10 basis points. We can all agree on the ingredients. Bit of politics, some economic data. The recipe is at 500 grams of one versus 250 grams of the other. That's where the real debate is this morning still.
Yeah, I'm bringing out my measuring tools and I'm adding in there, the box of powdered congressional composition and, the jar of potential presidential margins. I mean, these are sort of the aspects that people are trying to suss out. The real issue is people would agree that there isn't a fully priced scenario one way or another. And to the extent that we've taken chips off the table of the Trump trade, there still is more to go to take out the Trump trade. And there would be more to go to put on the Trump trade should Donald Trump win.
No one really knows who has the edge, because also when you look at these polls, they're within the margin of error. So statistically, these are tied. But you brought up a good point. This is just a presidential race. We need to know the composition of Congress to actually understand what kind of fiscal power we can see from either side.
Yields down across the board this morning. With an update on stories elsewhere with your Bloomberg Brief, here's Danny Berger. Hey, Danny.
Hey, John. Sticking with politics, Kamala Harris is hitting out at House Speaker Mike Johnson after he made comments calling to roll back a $280 billion package to boost research and domestic manufacturing for semiconductors. Johnson quickly issued a statement saying that he misheard a question and instead supports efforts to streamline and improve the bill. Kamala Harris responded to the comments saying, quote, "It is my plan and intention to continue to invest in America." TGI Fridays filed for Chapter 11 bankruptcy protection over the weekend. The casual restaurant chain has been struggling due to pressure from increasingly cost-conscious consumers. TGI Fridays executive chairman said in a statement, "The primary driver of our financial challenges resulted from COVID-19 and our capital structure." There has been a string of troubled restaurants filing for bankruptcy this year, from Red Lobster to Tijuana Flats. Spain's prime minister had to be rushed away by security after an angry mob surrounded him and King Felipe VI as they visited a town devastated by last week's flash floods. The crowd chanted murderers and hurled mud at them. At least 211 people have been killed in the unprecedented flooding. The crisis puts the country's fragile system of decentralized power in the spotlight. And that's your brief, John.
Hey, Danny, thank you. Shocking pictures, shocking imagery coming out of Valencia over the last week. Up next on the program, the final message to voters.
In one of the most consequential elections of our lifetime, and we have momentum. It is on our side. Can you feel it?
We must stop a radical left agenda with a landslide that is too big to rig. We're going to get too big to rig. In other words, get out and vote.
That conversation up next on a program live from New York City this morning. Good morning. Let's set the scene. One day out from Election Day in America, and bonds start to rally. Yields down by 10 basis points, 428.27. In the equity market, we're doing okay, but in the foreign exchange market off the back of this move, Lisa, that dollar strength gets faded. Dollar weakness this morning.
Faded is one word, annihilated is another. You just see the absolute tanking in dollar trades versus the euro versus the Mexican peso. This just raises the question again. How much of the Trump trade had been priced into the market? How much is still priced into the market? And how jumpy are investors with zero edge, with really narrow razor edge types of polls?
We're seeing some rebalancing this morning. Let's put it that way. Under surveillance, the final message to voters.
In one of the most consequential consequential elections of our lifetime, and we have momentum. It is on our side. Can you feel it?
We must stop a radical left agenda with a landslide that is too big to rig. We're going to get too big to rig. In other words, get out and vote.
So here's the latest on a knife's edge. The latest polling from NBC News showing Donald Trump and Kamala Harris neck and neck with the close of the U.S. election just 1 day away. More than 75 million people already casting ballots in early voting, representing nearly half the amount of total votes cast in 2020. Bloomberg's Tyler Kendall joins us now from West Palm Beach, Florida. Hey, Tyler.
Yeah, good morning, John. I'm here in front of the Palm Beach Convention Center. This is where former President Donald Trump will rally his supporters for an election night watch party tomorrow as the results start to pour in. But before he gets here, though, he is spending today crisscrossing the nation, hitting some of those key battleground states that we have been closely watching. He's going to start his day in Raleigh, North Carolina, before heading to Pennsylvania for 2 stops, one in Reading, another in Pittsburgh, which is typically considered to be a Democratic stronghold, before heading to Grand Rapids, Michigan later tonight. Now, something interesting about all of these places is that they are all in counties or they are near counties that former President Donald Trump lost in 2020. So clearly a bid by his campaign to try to shore up support, get out the vote in some of these areas where they might feel that he underperformed in. Because I don't have to tell you that at this point in the race, it is all about turnout. We often talk about undecided voters. Today, when we are talking about them, it might not necessarily be undecided between Trump and Harris. It is undecided on if they are going to vote at all. But as you mentioned, we are seeing a surge in early voting already. At least 75 million Americans have already cast their ballots, John. That is well above pre-pandemic levels.
Tyler, given he's going to some Democratic cities, who is he actually trying to target in these final 24 hours?
Right, exactly. So recent polling shows us that there is likely a gender divide going into Election Day, with Vice President Kamala Harris leading when it comes to women voters. So we know that the campaign has really been trying to target some younger male voters to bring them into the camp, even though they are less likely to vote. Polling shows us, though, that they are growing increasingly more conservative as well as more weary about their economic status, 2 things that should bode well for former President Trump. But Amory, it's going to be no easy feat. Exit polls from 2020 show us that only 4% of those that cast ballots in that election were men ages 18 to 24.
Tyler, appreciate the update. Tyler Kendall there of Bloomberg in West Palm Beach, Florida. A lot of data to work through. Tom Bonier of Tara Group highlighting the changing makeup of the electorate between 2020 and this election, writing, we've seen the electorate shift in Harris's favour through voter registration. The challenge is turning those voters out, but I'd rather be the Harris campaign with a bigger pool of potential voters than the GOP ticket. Tom, I'm pleased to say, joins us now for more. Tom, welcome to the programme. You've identified what you call the silver surge. Could you share with our audience what you mean by that and what you're seeing?
Absolutely. You know, as you just heard from Tyler, a lot of the focus on both campaigns has been on turning out younger voters. I think perhaps what has flown a little bit under the radar so far is older voters. We're looking at voters over the age of 65. We know older voters tend to vote at pretty high rates anyhow. But when we look at the early voting across the 7 battleground states, what we're seeing that's sort of surprising to me, at least, is turnout numbers that are exceeding the 2020 pandemic early vote numbers, especially among Democratic-leaning seniors.
Well, what we've heard from the Iowa poll over the weekend from J.N. Seltzer is that she is seeing women, especially north of 65, come out for Kamala Harris. Is that the cohort you're focusing on? And what do you make of this Iowa poll?
Yeah, that's absolutely the same cohort. You know, when I wrote the analysis that you referred to a moment ago, it was actually, I think, just about 24 hours before that poll came out. So it seems like there's something coalescing in a lot of different data sets at this moment. That Iowa poll obviously paints a very optimistic scenario. We know that for the Harris campaign, at least, we know that Donald Trump carried Iowa by over 8 points. So seeing a 3-point margin for Vice President Harris, I think, was shocking for a lot of people. We know that Seltzer poll is traditionally very, very accurate. And so I think a lot of people are looking that through the context that even if that poll is off by 3, 4, or even 5 points in the margin, it's still a very, very good sign for the Harris campaign. And again, as you mentioned, it seems to be driven by improvements with these older voters, especially older women, especially older Democratic and independent leaning women.
I'd love to talk about white women because they are the largest demographic when it comes to the electorate, making up 30% of the electorate. 2016, 47% of white women voted for Trump, 45% for Hillary Clinton. But even more white women voted for Trump in 2020, 53%. Where do you see these margins ahead of tomorrow?
Well, I think the potential to see a bigger swing back where Democrats may do better than 2016 with these voters is based on the Dobbs decision that we saw 2 years ago. We've seen since then, and this is a limited data set, so we have to take that into account. But in the 2022 midterms, looking at special elections since then, and even looking at some of the presidential primaries and the crossover voting we're seeing more of these white women, especially college-educated white women, have been supporting Democrats at higher levels than they did in 2016 or 2020 in these post-Dobbs elections.
When you look at where Kamala Harris is today, she is not leaving Pennsylvania. She's going all over the state. Is that for you? Do you think that is where she is the most vulnerable?
Well, the map has always been the blue wall states. I think for both campaigns where they've understood that will most likely be where it will be contested. And when you look at the data now, we look at the early vote, we look at voter registration trends, and then we layer on top of that the polling data. We've seen that Michigan and Wisconsin appear very strong for Vice President Harris. Pennsylvania is doing what it always does this time of year, which is it appears very competitive. Republicans have turned out more of their voters in the early vote than they did 4 years ago. Now, that said, it was about a rock bottom for them 4 years ago where President Biden won the early vote by an almost 3-to-1 margin. But what we're seeing is that the voters who Republicans are turning out in Pennsylvania are much more likely to be cannibalized election day votes. People who voted on election day in 2020, it's over half of their early vote. Another 43% are Republicans who voted by mail last time around. So only 7% are new voters. So again, it looks close. Both sides are obviously contesting it closely. I do think it's still most likely to be the tipping point state.
Tom, appreciate your perspective, sir. Some smart stuff there. Tom Bonier there of Tara Group. Sophisticated perspective on reading the tea leaves, and then you've got things like Peanut the Squirrel here in New York City, which I really wanted to ask about because it became a bit of a thing over the weekend.
Peanut the Squirrel, absolutely.
Big time.
This is the squirrel that was living in New York. It's been a pet for this individual for 7 years. The DEC of New York State came in, took the squirrel.
Shocking.
Killed the squirrel.
Shocking.
And there has been an absolute outcry on the internet, on the airwaves. He's joining people like Mr. Cuomo, going on TV and talking about the fact that this is unacceptable.
This could tip the balance in the election as well. It's finely balanced, you never know.
I'm not sure. I'm not sure.
I'm only
Peanut's
bringing
moving
this
New
up
York.
because I wanted
honestly,
to see Lisa's face in real time.
I honestly can't believe that this is the state of the election. Are people really running out of things to talk about, that they're going to talk about a pet squirrel?
Well, the thing is, this pet squirrel is not just any sort of pet squirrel.
Of course
he is
not.
a TikTok, Instagram star.
Absolutely the tipping point for the American election.
You can't forget Fred the raccoon.
Jesus, mother. Wow.
Here we go. Serious stuff. Equities right now on that story. Not at all. We're up by 0.2% on the S&P 500. In the bond market, it's a rally. Yields are down by 10 basis points. Bramo will never forgive us. Up next on the programme, Dan Niles of Niles Investment Management following a week of tech earnings. That's just around the corner. This is Bloomberg. An update. They argued for 3 minutes straight about a squirrel. That's what happened. I wish the camera was rolling, but that's what happened.
At least I'm on the side of animal justice.
It's not about the squirrel. It's about the focus of it as an election issue rather than an anecdote.
You were involved, very engaged.
I am engaged.
I know.
I think it's important.
Okay, we can come back to it a little bit later if you really want to.
No, it's okay.
Equity futures on the S&P 500 shaping up as follows. We look a little something like this. Equities firmer by about 0.1%. We give way on the Nasdaq. We're negative. Likewise on the Russell. The big move this morning is in the bond market. 2-year, 10-year, 30-year. Yields down across the board. We're down 10 on a 10-year to 4.2827 as some of those Trump trades start to rebalance through this morning.
Stuart Kaiser of Citigroup came out before this move saying de-risking and higher yields have been the pre-election trends. Cleaner positioning supports higher equity markets post-election. basically everyone had piled in. How much is this just taking some chips off the table versus actually believing that Harris is going to win or has the upper hand? Honestly, this is going to be really messy for traders who are trying to parse through the science all night.
Turning those Trump trades upside down. Short bonds along the US dollar. Check out the dollar now. Weaker against the euro. Weaker against the yen. Much weaker against the Mexican peso. Some classic Trump trades, particularly the one at the bottom. Dollar Mex.
Yeah, and I really am watching things like the dollar versus the peso. I'm looking at things like yields in terms of what tea leaves people are reading for the election, not necessarily their views on Peanut the squirrel. And that was what I was trying to say. I'm not getting back into that. But here's the issue.
Hey, you brought it up though, didn't you?
But the policies here. Is there going to be a tariff on Mexico? Is there going to be a huge wall that gets put up? Are immigrants going to be deported, or will immigration be really curtailed? Those are the issues that right now are swaying the election.
If you want to make Peanut the squirrel an election issue, it's about the heavy hand of the government. And should they be allowed to come into your home and seize a pet that you've had for 7 years? That's actually the crux of this story if you want to look at it through a political lens.
Zeitgeist. Dollar weaker. We're down 1/6%. Keep it together. Under surveillance this morning, let's turn to the commodity market. Oil prices rising amid production delays from OPEC and concerns around escalating violence in the Middle East. A Wall Street Journal report that Iran's supreme leader is weighing retaliation against Israel for its strikes in the country last month.
So the Islamic Revolutionary Guard also said on Sunday they would, quote, certainly respond, a retaliation to what Israel had done to them just a few weeks prior. Details cannot be discussed, but it will certainly be carried out. That's what we heard from the Islamic Revolutionary Guard. Now, what we are also seeing in that report is it's not going to happen before the U.S. election, but it would happen before Inauguration Day. So regardless, the Biden administration is going to have to deal with this.
To me, this is the wild card. Essentially, everyone is waiting until the election to then engage. And you're going to not necessarily have such a strong hand in the White House, considering that it will be a lame duck president. So here's the question. How much geopolitical risk gets reintroduced immediately following the election, especially with some of the threats that we're hearing that may or may not be validated, but nonetheless carry some pretty big implications for oil and for the peace in the Middle East?
It always is. But this is why this time even more so. This is a high-stakes presidential election. Two massive stories, one in the Middle East, got another in Ukraine. Let's make it three. What happens with China? Their stories looking for some leadership.
And what happens with China is going to be very interesting depending on who wins the election. In the Wall Street Journal recently, the former president Donald Trump was asked about if China were to invade Taiwan. And he said Xi Jinping would never do it because he knows explicitive crazy, using a curse word there. The reason why there's so many questions is because if it is Harris, it's basically a continuation of what we're likely seeing from the foreign policy world in the Democratic space. If it's Trump, there's a lot more questions that get reintroduced.
Status quo or a big change. Election day in America just 1 day away. The final round of polling showing Trump and Harris on course for a photo finish, with the two candidates locked in a dead heat, both nationally and across key swing states. Lisa, as you suggested, and you're right to frame it this way, we keep saying election day 1 day away. Everyone knows what we mean by that. But of course, people have been voting for quite a while already.
And we already have almost half of the votes in. If you take a look at the total number of people who voted in 2020 and you superimpose it into 2024, a key question here will be, what tea leaves will the markets be looking at the night of the election? One warning that I've seen time and time again, don't be subject to head fakes, because you're going to be hearing a lot of different things coming out, and don't make assumptions or put a narrative into the market. Right now, it does seem like an all-nighter, and it does seem like a race that is closer than possibly any other race, at least in the polls in history.
And if you think this Seltzer poll has some weight to it, when she predicted Trump would win Iowa in 2016, that poll came out 3 days before the election. And it showed Trump with 46% of the vote and Clinton with 39%. So she does have a track record. Now, Republicans have poked holes in this with me all weekend, saying you have to look at the primary in 2016. You have to look at what she's saying about one of these congressional races. She's saying now that Republican is down 16 points. The Republican won that race 2 years ago, up 7 points. But the fact of the matter is, there could be this shy voter people have been talking about. Is the polling underestimating either first-time registered Democrats or younger and older women?
We've talked a lot about election fatigue. Can you imagine being one of these swing state voters in one of these target counties who have been absolutely bombarded now for weeks, non-stop, with campaign ads.
Not only that, have you heard about what some swing state voters are doing in a place like Michigan, where they want to protest vote on Harris, but they necessarily don't want Donald Trump to win? What they are doing is finding a voter in a state that doesn't matter, say New York, and saying, do me a favor, write in a candidate or write in for vote for the third party, and I'll cast your vote for Harris here in a state like Michigan.
Or register to vote in the Hamptons this time around. You saw that too?
Yes, people are registering to vote in the Hamptons because they want to get John Avalon, some buddies of some people, elected. He's the Democrat. But normally they would vote in New York City, and they feel like the vote in New York City doesn't matter, but maybe they can go to out east on Long Island and try to help flip that district.
Speaking of campaign ads, the latest news on this front, NBC filing a notice with the FCC to provide Donald Trump with equal time on the network after a surprise appearance from Kamala Harris on Saturday Night Live over the weekend. NBC reportedly airing 90 seconds of Trump addressing voters during its coverage of the NASCAR playoffs on Sunday, following a post on X from the FCC chair.
Yes, so this is coming from Commissioner Brendan Carr as well. He has been out criticizing Harris's appearance, even though it was 90 seconds, a minute and a half on Saturday Night Live, saying that broadcasters are required to give rival candidates equal airtime if they want it. So then, of course, they gave Trump some time as well on Sunday because of this. They want to make sure they're balanced. I would also, though, ask historically, Trump has been on SNL a lot more than Kamala Harris. He went there in 2015, and even prior to that, he was on SNL, and he was loved.
They used to love him. They used to absolutely love him. And now they don't so much. Let's turn to tech. A week of earnings from Microsoft, Apple, Alphabet, Amazon and Meta, beating analyst expectations but failing to justify their lofty multiples for some of you. Dan Niles of Niles Investment Management joins us now for more. Dan, it's been too long, sir. Welcome back to the programme. We've seen a ton of earnings from big tech over the last week. What stood out for you?
Well, I think the thing that really stood out was that a lot of the trends that we saw out of the June quarter, you saw sort of repeated in the September quarter. And in general, you saw some haves and have-nots coming out of it. So for me, the names that I like through the end of the year don't really change that much. We like Meta and Amazon coming in. Those are still two of our favorites through the rest of this year. And then NVIDIA, obviously the CEO talked about insane demand about a month ago with their new chips coming out called Blackwell. And I think that's going to be continuing at least for the next 3 to 6 months. So I think, the election, I know everybody's caught up on it, but don't forget the market did really well, up over 20%. Last year, it's up about 20% this year. I think the election causes some volatility, but then I think we go back to focusing on fundamentals as usual once we get through, hopefully, this coming week.
Well, Dan, let's talk about the next week. When you think about the election, do you think about direct policies that could hit tech firms, or do you think the indirect consequences of, say, a policy hitting the bond market could do something to tech stocks? How do you think about things?
Well, I think if you look at tech stocks, the current administration is basically going after almost all of them in terms of trying to break up Google or, you pick your favorite. So I think if there is a change, that's beneficial to tech stocks. If there isn't, these companies have been going through this for a while now. I don't think it really matters that much. It's going to come down to how is AI working for you? How much are you benefiting from it, or how much is it hurting you? I think when you look at the bond market, that's the one that's a little bit more interesting because people may forget that you had an election a couple of years ago in Britain, and the candidate there wanted to put in price controls on energy, cut taxes. The deficit was going to go up a lot for them, and the bond market absolutely rebelled, and that presidency lasted 50 days. And so when I look at the bond market right now, before the Fed cut, 10-year treasuries were about 365. Last Friday, they closed at 438. And so you look at that combination of the Fed plus both candidates, no matter who you pick, the deficit's going to go up a lot. And so you wonder, is that what's going to cause the real problem on the other side of this? And so it's something I'm watching, but obviously being the world's reserve currency, which the US dollar is, has lots of benefits. And so this can go on for longer than we all imagine.
Dan, when you look at some of these tech companies, though, a lot of the CEOs have been doing these quote unquote check-in calls with the former president. It feels like they're trying to hedge their bets regardless of who wins, except for one, Tesla. They are out there in the open. Elon Musk, he is playing this really outsized role when it comes to U.S. politics right now. Can that hurt Tesla and demand for EVs in the United States?
Yeah, I don't really think so, because here's the thing you have to think about. When the U.S. had its first EV summit, what was the company that wasn't invited?
Elon Musk.
That was Tesla. That was Tesla. And so you go, does that make any sense in any world to not have Tesla show up to an EV summit? So to some degree, if the current administration stays in charge, he's going to be in the same boat that he was before. So you got to believe that every CEO of every major tech company has a favorite, whether it's Trump or Harris, but they're all hedging their bets with the exception of one. Whether you like him or not, you got to give him credit for at least being out there and talking about it. But Dan, at the end of the day, I don't think the election and whoever wins or whoever he's going to support is going to affect the demand for cars, because think about this. They already had results.
But I guess my point is, will he turn off maybe Democratic voters that were interested in buying a Tesla?
Well, my point is that he was already campaigning for Trump, and they had a great outlook for this upcoming quarter. The stock was up 20% or so after that. So you've already seen whatever impact that was going to have, and I don't think it's going to really matter going forward. It's going to come down to competition from China, what the EV tax credits are like. Do they get out a cheaper model? And what about full self-driving, autonomous robots, and robo-taxis? I think that's going to be the major thing that impacts Tesla in the future. And quite honestly, on the negative side, it's got an extremely high multiple. So if there are any hiccups on some of those new programs at over 100 PE, that's going to be a big deal. So that's really what I'm focused on.
There's a larger question here, which is how accurate are the Trump trades? How much are those the areas that really are going to benefit under a potential Trump administration? And how accurate are the Harris trades? Are there any trades that people are sort of categorizing as in one camp or the other that you think are wrong or overstated?
Well, the problem is, at least from my perspective, the race is too close to call. And so I think, as I said earlier, you're going to end up with some volatility regardless of what happens on Tuesday. And hopefully we know who's president on Tuesday. And then I think it goes back to business as usual. We're going to stop talking about the race for president. We're going to start focusing on how good is consumer demand into the holiday season. What does inflation look like? Don't forget the Fed has a decision on Thursday. I think everybody pretty much expects 25 basis points. But what do they talk about in terms of the future? How aggressive are they going to be? And so for a few days, obviously, this is going to be in the news cycle. And then we're going to have some certainty. I honestly think the market rallies between now and year end. Do we get potentially a pullback over the next few days because of whatever happens? Yeah, that's very possible. But also, don't forget, a lot of people are de-risked going into this event. Nobody wants to get blown up on the other side of this. And so it wouldn't surprise me either if you see a rally because everybody goes, oh, thank God, now I know who's going to be president. And I can go back to figuring out, is Amazon going to have a good retail season with the consumer? What's going to happen with Google antitrust? Because don't forget, there's a decision coming out on that. And so you're going to go back to these sort of fundamental issues that are going to drive these stock prices.
A lot of people looking forward to that, Dan. Dan, it's good to hear from you, sir. Let's do it again soon. Dan Niles there of Niles Investment Management. Let's get you an update on stories elsewhere this morning with your Bloomberg brief. Here's Danny Berger. Hey, Danny.
Hey, John. Israeli Prime Minister Benjamin Netanyahu's office is accused of leaking classified documents that help justify tough demands in the ceasefire negotiations with Hamas. 4 suspects, including a Netanyahu spokesperson, have been arrested. Opposition leaders and security experts say the leak compromised national security in the war effort, while Netanyahu calls it a witch hunt. Berkshire Hathaway's cash pile reached a record $325 billion in the third quarter. It's the latest result showing that the company cut its stake in Apple once again, boosting that cash hoard. Berkshire reported operating earnings that fell 6% from a year earlier as insurance underwriting earnings slumped. Venom 3 took the top spot at the weekend box office for the second week in a row. The superhero film brought in an estimated 3-day total of $26.1 million. The Wild Robot and Smile 2 followed in second and third place. The film here, which reunites Tom Hanks and Robin Wright after years, 30 years to be specific, after Forrest Gump, that was snubbed by moviegoers, opening to only $5 million. And that's your brief, John.
Danny, thank you. Have not been to the movies for months. Months and months.
Venom 3 or Smile 2 didn't really
Tom Hardy
get
and
you?
Venom's not going to make it happen.
Laughing 4?
Nope.
Okay, well, let's
Gladiator might make it happen.
I know.
Right?
You are
Gladiator,
big on Gladiator.
A few weeks away, right?
I love that all
Denzel.
of the hit movies.
I haven't been since post-pandemic.
All of the hit movies really are repeats, or sort of like reimaginations.
Did you hear that?
She hasn't been since the pandemic. Well, I don't know where you've been.
You haven't been since the pandemic?
No one's invited me.
Okay. Someone can make that happen for you. Up next on the programme, clearing the path for another rate cut.
The data are consistent with an economy that's still robust, an inflation rate that is proving somewhat more sticky than you would like.
That's coming up next on the programme, live from New York. This is Bloomberg. That was a sad end to that segment, wasn't it?
Yeah.
No one's asked Anne-Marie to the movies?
Okay, so
it's depressing
we've heard
stuff,
that
Bramo.
she has gotten some invitations.
Okay.
Yeah, I have heard. So are you going to go?
Depends what the movie is.
Did the terminal light up? No? Okay, we'll leave that there. Save that for commercial break. Equity futures right now on the S&P 500 positive, just a little bit. Yields much lower. We're down 10 basis points. The 10-year 428.27. Under surveillance this morning, clearing the path for another rate cut.
The data are consistent with an economy that's still robust, an inflation rate that is proving somewhat more sticky than you would like, and a major call for the Fed to exit this notion of fine-tuning and go into a world where it has a steady steer on interest rates. It should be cutting by 25 basis points for the next few meetings.
So here's the latest. Payrolls advancing at the slowest pace since 2020, clearing a path for the Fed to continue cutting interest rates. Lindsey Piegza of Stifel writing, while an adjustment in conditions does warrant less firm policy, as well as a further reduction in rates, another outsized 50 basis point move is clearly unnecessary, with the base case returning to smaller 25 basis point cuts from here. Lindsey joins us now for more. Lindsey, welcome back. Before we get into policy, let's start with data. How noisy was that number on Friday?
Well, it was pretty noisy, and most of the weakness can be largely acknowledged as hurricane-related weakness. And the Fed is all aware of the noise that typically follows into the data reports for several months after such weather-related disaster. And so I do think that, yes, there was a lot of noise. We have to compare it with the resilience that we've seen in the labor market for several months leading into this, not to mention the September employment report at a multi-month high. And remember, even with that top-line number coming in well under expectations, we saw wages tick higher. We saw the unemployment rate remain steady. So it's pretty clear that the weakness in the report was more of a one-off, again, hurricane-related weakness.
Lindsey, we were speaking with Yardeni earlier from Yardeni Research, and he was saying that he sees real signs of bond vigilantes coming back and thinks that the increase that we've seen in longer-term yields, and frankly yields across the curve, is an indication that it was an error, or it was sort of premature for the Federal Reserve to cut by 50 basis points. Would you agree?
Well, I do think the move was somewhat excessive, particularly given the contrast of what we saw in terms of the Fed's assessment of the economy. At the same time, they opted to make that larger 50 basis point cut. They told the market that they characterized the economy as solid. They said the labor market was in solid condition with the unemployment rate still low. And while inflation had been making improvement, they said there was still further ground to cover. So there was somewhat of a hawkish tone in the statement accompanying that outsized dovish move. And when we look at the data, I think the Fed's assessment was more on target. The economy does appear to be very resilient. We see this ongoing resilience in the consumer. And we do see, again, that sticky nature of inflation, which suggests that that 50 basis point move might have been excessive in nature.
Whatever happened to the long and variable lags, Lindsey? We've been talking about how steady the labor market is and how the economy is set to grow, albeit at a relatively modest pace. Are we just saying that that was wrong and that there were no long and variable lags and that the lags just, aren't really showing up?
Well, remember, the long and variable lags are typically associated with monetary policy that's increasing in firmness. It takes a longer period of time for rate hikes to filter into the economy as opposed to rate cuts. Those tend to filter out into the real data at a much quicker pace. So we have to be careful when we're talking about which side of the cycle we're on. Now that the Fed has taken this policy pivot and expectedly continues with rate cuts, that easier money policy is likely to filter into the economy at a much more rapid pace than what we saw in rate hikes on the way up.
If that's the concern, then do you expect a skip either this week or in December?
Well, I think given the 50 basis point decision in September, bypassing November would essentially be an admission by the committee that that was an excessive move, that they didn't need to make that large of an outsized cut. And so we do expect the Fed to continue in November, albeit at a smaller pace with a 25 basis point cut. But should we continue to see indications of strength in the economy, resilience in the consumer, a sticky nature in inflation, I think the Fed would look to December for a potential pause in policy adjustments.
When you look at the resilience in the economy, I know it's a one-off when you look at the 12,000 jobs added on Friday. But if there wasn't a hurricane impact and if there wasn't a Boeing impact, what would the jobs number be?
Well, I think if we look at the underlying trend in job creation, we see that we were on a very steady path of adding roughly 200,000 jobs on a monthly basis. So again, smoothing out some of that month-to-month volatility, I think that was the general pathway that we would expect for the labor market, excluding some of that weather-related disruptions. And remember, the unemployment rate has been very solid at this 4-ish% pace for quite some time, with wages sticky at about 4%. And so if we exclude the hurricane's impact, I would have expected the employment report to look closer to that solid expansion that we'd been seeing.
Big downside surprise on Friday. Lindsey, thank you. Lindsey Piegza there of Stifel. Just got a note from Kit Jukes of SocGen. A clean sweep and a Harris win without a clean sweep remains the two most likely outcomes in our view. So a Trump clean sweep and a Harris win without a clean sweep remains the two most likely outcomes in our view, and equally likely. And then it gets even harder for markets. These are the most bullish and most bearish outcomes for the dollar, respectively. What do you do with that? That's the challenge that everyone's got into tomorrow.
And this is the reason why we're seeing such incredible volatility in some of these pairs, in particular the dollar Mexican peso, because there isn't an edge, and we keep talking about that. With respect to those two outcomes, there is a feeling the Senate will go red. And there is a feeling that a red sweep is more likely than a blue sweep. And that has been baked into markets, albeit has been coming in pretty significantly over the past week. But now going forward, question really is, where did the polls get it wrong? We don't know.
Well, when it comes to the Senate, you're exactly right. The conviction call is that it is going to be red because Democrats have more seats they are defending than playing offense at. But the question for the Senate now is, how big is the margin? Is it 51? Is it 54? We don't know.
Very tight margins, that's for sure, at the moment at least. Coming up on the programme, in the third hour of Bloomberg Surveillance, we'll catch up with Mike Wilson of Morgan Stanley, the Ryanair CEO, Michael O'Leary, Stephanie Roth of Wolfe Research, and Sarah Malik of Nuveen from New York. This is Bloomberg.
It all comes down to the election.
The race in various battleground states are quite tight.
This is effectively a tied race. It's going to be tight all the way through the wire.
All the T's are crossed and the I's are dotted, and we will have an outcome on Wednesday.
We think we get a very clear result in the first 48 hours post-election.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowitz, and Anne-Marie Hordern.
90 minutes away from the opening bell, let's get you some scores. Equity futures on the S&P 500 firmer by 0.1%. No drama in the equity market. Some drama in the bond market, though. If we switch up the board and get to what's happening in fixed income, yields down on a 10-year maturity. We're down by 9 basis points, down by about 10 through most of this morning. You'll notice a much stronger Mexican peso, a much weaker US dollar. You'll notice that Asian equities have done nicely as well as we start to unwind or rebalance some of these Trump trades coming into a brand new trading week.
basically all people know about what could potentially be policy is that there's either more debt or even more debt. And the question is, how much do yields go up to even more debt, which is the Committee for the Responsible Budgets Assessment and a lot of other CBOs as well, of Trump's budget being more in terms of a deficit versus Harris's. Still, it's a relative game. So you have to wonder, how much are we stripping in or stripping out some sort of political overlay, and how much is this just a fundamental economy, which with a neutral rate that is much higher than it's been in the past?
Or the bond market paying more attention to Burlington, paying more attention to what's going on in Iowa. And this report over the weekend, this poll from J.N. Seltzer, talking about that Kamala Harris is up 4 points. In September, she had Trump up 4 points. And then in in June, it showed Trump with an 18-point lead. That's when it was Biden. So now you have everyone starting to think about maybe the polling, even though it shows it's neck and neck, maybe there's something they're missing and they're underestimating.
That polling has made some Trump trades nervous over the weekend and into Monday morning. I mentioned a note from Kit Jukes over his SocGen just moments ago. I want to share it with you again. A Trump clean sweep and a Harris win without a clean sweep remains the two most likely outcomes, and in their view, equally likely. These are the most bullish and most bearish outcomes for the dollar, respectively. That's how hard it is in foreign exchange.
Which is the reason why everyone's going to be up all night and trying to figure out what the tea leaves are. I question the logic of that, of whether these are actually the clean trades, if those outcomes are the likely outcomes. People have been modeling, including Mike Wilson over at Morgan Stanley, what 2016 looked like, what 2020 looked like. I looked at a whole host of performances that someone else put out. The answer is we have no idea, because it's the setup that goes in, and it really comes to how big the surprise is on the back end. And I think that that's what a lot of people are looking at.
You can question Kit directly tomorrow morning, 6:45 Eastern Time, when he joins this program. You can question Mike as well. Coming up on the program, Mike Wilson of Morgan Stanley as investors pare back some Trump trades. Ryanair CEO Michael O'Leary as the airline cuts its growth target following Boeing delays. And Stephanie Roth of Wolfe Research on why Trump's tariff policy is one of the most underappreciated risks. We'll return to that a little bit later. We begin this hour with the equity rally stalling, going into a defining week for financial markets worldwide, with some traders beginning to unwind Trump trades as the latest New York Times Siena poll shows Vice President Kamala Harris ahead in 5 of 7 key swing states, and one poll giving Harris the edge in Iowa, a state Trump won with ease in 2016 and in 2020. Mike Wilson of Morgan Stanley joins us now for more. Mike, it's good to see you.
Great, thanks for having me.
Let's get into this. The parallels between now and 2016. How strong are they?
They're not strong at all, because, I mean, like, at the end of the day, the business cycle and earnings and also interest rates will determine kind of where stocks trade over the next year or two. And in 2016, as you recall, we went into that election with a lot of slack in the economy, right? Things were slow. We had a manufacturing recession around the world in 15, 16. The Fed was, rates were pretty low. Generally, the economy had a lot of slack from a labor standpoint. So it could receive kind of a pro-reflationary policy strategy. Today, we don't have that slack. So prices are extremely high. Consumers and small businesses are much more, I would say, sensitive to higher interest rates. So rising interest rates and kind of a pro-cyclical strategy not going to be good for those types of stocks. And I think also the bond market now is in a much different position, right? We have way more debt, as you mentioned earlier. In 2016, we had plenty of slack in the borrowing markets. Today, we don't have that.
Here's what doesn't make sense to me then about the Trump trade. If you get bond yields that climb, how can risk assets keep rallying?
Well, I think it depends on why they're rallying. Okay, so I do think the equity markets are still nervous about growth concerns. I mean, the labor market's all over the place. I mean, people can make excuses for why it's better or worse month to month, but the general trend in labor is down. We're in a late cycle economy, so the equity market is worried about growth slowing, and that's why the Fed's cutting interest rates. Okay, so the bond market can't. I mean, the market goes up because growth is better, and people believe that, then it could be okay for equities. If bond market yields go up because term premium is widening, because of fiscal sustainability issues, then it's a problem.
Well, I guess the reason why I ask this is because the Trump trade the knee-jerk reaction supposedly is bond yields go up and equities rip, particularly in the more cyclical sectors. I'm thinking of financials. Based on the idea that you're not necessarily getting some sort of economic impulse that's immediately overlaid onto this scenario, why should risk assets continue to rally if yields continue to surge simply on this idea that the deficit's increasing and that bond vigilantes suddenly could be back?
Well, I mean, first of all, the financials is a little bit different because that's a dereg sort of call, and I do think that one's fairly visible. I think if you have a Trump presidency and maybe even a red sweep, you could get more lenient regulatory environment, maybe M&A picks up. That's kind of the financials trade, but that's unique. And we don't think the financials have really rallied that much on that trade yet. It's been more about the third quarter earnings season and the fact that we went into that earnings season with not a lot of high expectations. So I think there's scope for further follow through in certain quote unquote Trump trades. At the same time, there's probably, the other side, which is that I think a lot of the negative trades have played out for the Trump trades. I mean, bonds have sold off probably too much. And the renewables and things like consumer goods companies that will be hurt by tariffs have really been hammered. So if Harris wins, you could see a pretty big rebound in some markets. So there's a lot of permutations here. It's not as clear cut. I think you said it exactly right. It's all about the setup. Okay, stocks and asset prices move based on positioning as much as they do about the actual news. I'm looking for a clearing event. Okay, I'm hoping this is a clearing event, and then we can kind of get back to doing what we get paid to do, which is analyze interest rates, earnings growth, and kind of multiples, trying to figure out, okay, what's the fundamental case here? And my guess is that could take maybe a month to kind of clear.
When it comes to a clearing event, would you agree with Kit Jukes that it's either likely going to be a Republican sweep or Harris with gridlock, a.k.a. Republican Senate?
Yeah, I think that's probably, that's what the prediction markets say. I mean, who am I to argue with that? But it's not like it's a slam dunk, okay? I do not agree with the view that a Republican sweep is the best outcome for equities. I think it's probably Trump with a divided Congress.
But a Republican sweep means a 15% corporate tax rate, potentially.
Potentially. I mean, let's see if they can actually get that through. I mean, the bond vigilantes may come for them if they try to cut taxes in that sort of form or fashion. And they're not even talking about, they're talking about at the margin trying to reduce some taxes, maybe extending some certain things. I think the bond
margins, the whole election has been a tax cut election.
Yeah, but I don't think that's priced. Just like in 2016. Remember, in 2016, nobody priced that bond cut until December of 17 when the Senate actually passed it. I mean, the whole year is like, it's never going to happen. It's never going to happen. I think the markets they always wait for the actual evidence to actually trade those types of events, particularly when it comes to Congress.
You said the most beneficial, Trump with divided government.
Yeah.
Can you explain that just a little bit more?
Well, the market's like uncertain. They don't want one party in power. I do think that a Trump, we said this all along, Trump presidency is probably more pro-growth, okay? Maybe not as good for bonds. Harris would be probably a little less growth, but probably better for bonds. And that's been our general view even prior to the last couple of weeks as things have kind of traded through. Now, at the margin, is it going to be dramatically better? I mean, I don't know. The markets have already priced a lot, right? You know what I'm saying? Like, that's the problem. We've already priced a lot of good news. And let's take a step back, too. We're trading almost 22 times earnings, okay? In 2016, we were trading 16 and a half times earnings. So you got 5.5 multiple points of, we got to justify that no matter who wins this election. So we're just in a totally different setup going into this election.
So Ed Yardeni of Yardeni Research was on the programme earlier this morning and essentially said to us, choppy road to nowhere, flat market into year end. Do you share that view?
Well, choppy meaning there could still be some big swings. I mean, maybe we end up flat from here to there, but there's going to be some big trading opportunities between here and there. I think we could see 6,000 potentially, in some sort of a clearing event that isn't, there's not a lot of consternation. People feel good about things. But then I think it's really hard for us to get past 6,000, 6,100 in any scenario, because then you're so stretched on valuation, and I don't see growth accelerating in a kind of way which would justify even higher multiples for 2025.
Can you explain what this clearing event for a month looks like?
No, I can't.
Okay, all right. Well, can you give us a sense of what that could mean? I mean, is it basically just whipsawing every single day, or is it basically that you see one trade in particular that you could see really getting blown up during that period of time?
Well, I could see many trades getting blown up, not just because of the election, but because, once again, we're very stretched. We're into the FOMO season, right? People need to perform in the next 2 months. There's a lot of things going on here. And so I could see a blow-off move of some kind, post-election, a clearing event, but then reality sets in that we're going to have some kind of fiscal consolidation next year, no matter who wins. And in my view, I think that has to happen. And that, that's going to create uncertainty again. And then positioning gets kind of whipped around. The other thing that's going on is the Mag 7, which reported last week, was a mixed bag. What I was, we've been more pro-cyclical. What I was worried about last week was that they would come in with such great results that it would suck all the oxygen out of the markets again. So that didn't happen. But if we were to get a new theme, for example, let's say a new theme pops up, I can guarantee this, the money's going to flock to that theme very quickly, because that's what we need right now. We need something to get excited about, and we're kind of lacking in that. But something will happen, right? In other words, the market will find a new shiny toy, and it will move to that shiny toy.
Right now, the Fed is not the shiny toy. We have barely mentioned the Fed's meeting on Thursday. How much does that matter to this entire equation?
Isn't it Wednesday? You said it's Thursday?
It's Thursday.
It's Thursday. Moved it back.
Yeah. I know.
Okay.
It's very unusual.
Yeah, but Wednesday, they're meeting on Wednesday.
Yeah, they're meeting on Wednesday, but we have the decision on
They're still
Thursday.
meeting. They're going to know what happened or think they're. Anyways, yes. What do I think? I mean, they don't have any crystal ball. I don't think the election is going to change their decision making. So right now it's 25 basis points.
Do they change yours?
No. I mean, at the end of the day, the Fed's is somewhat on autopilot, assuming the economy doesn't take a really bad turn, then they got to cut even more rapidly. I think that the trick for the equity market is going to be what's their tone, the dovish tone or hawkish tone. Is it a hawkish cut or is it a dovish cut? But that's 1 or 2%. That's not a 10% move on the Fed. The Fed is kind of over here now. They're doing their thing. They made their decision. That was September. That was a shiny toy in September.
Right.
But now we've kind of got off of that. And now it's about earnings. And then as we go into year end, it's going to be how does 2025 settle in for the economy, for earnings growth, and where should multiples be based on how the equity markets are interpreting the move in bond yields.
Looking forward to having that conversation with you, Mike. It's good to see you, sir. Thank you. Mike Wilson there of Morgan Stanley with an update on stories elsewhere this morning. With some shiny toys, it's Danny Berger. Hey, Danny.
Hey, John. Franchise Group, the owner of brands including The Vitamin Shoppe, has filed for bankruptcy protection. Its backer, B. Riley Financial, had months of losses and turmoil. Bloomberg News learned that FRG listed assets and liabilities between $1 and $10 billion. The company's been entangled in issues surrounding a $2.8 billion buyout from B. Riley that went awry after FRG's founder faced a criminal fraud investigation. Security fencing was added around key locations in Washington, D.C. yesterday. The Washington Post reported that the Secret Service erected new 8-foot metal fencing around the White House, U.S. Capitol, and Vice President Kamala Harris's residence. District authorities are preparing for potential unrest following tomorrow's election. At a news conference, Washington's police chief said that he knew of no credible threats, adding that there is no need for any alarm. And maybe this is the shiny new toy. Saturday Night Live scored a big guest appearance during the open of last weekend's show. Vice President Kamala Harris surprised audiences by appearing alongside her doppelganger, Maya Rudolph. The sketch drew comparisons to a similar skit featuring Donald Trump on The Tonight Show back in 2015. The appearance, though, was called out by the chair of the FCC, who said that featuring Harris violated the agency's equal time rule. The network reportedly aired a 90-second clip of Trump on Sunday in response. And that's your brief, John.
Danny, thanks for the update. More from Danny in about 30 minutes' time. Up next, the morning calls, plus Ryanair CEO Michael O'Leary as the company cuts its passenger growth target for next year. That's just around the corner. From New York, this is Bloomberg. Unfortunately, we were in a commercial break, but if we weren't, and if the microphone was up on Michael O'Leary, we would have learned some interesting things. Might learn them a little bit later. Equity futures on the S&P 500 up by 0.1%. Let's get you some morning calls. First up, Bank of America upgrading Charter Communications to buy, saying it sees broadband subscriber trends continuing to improve. Your second call from Barclays, raising its price target on Chevron to 174, noting the company's focus on structural cost savings and spending rationalization. And finally, Citigroup opening a positive catalyst watch on Abercrombie & Fitch, expecting strong results when it reports later this month. Elsewhere, shares of Ryanair rebounding in Irish trading. The company cutting its passenger growth target for next year because of delivery delays from aircraft supplier Boeing. Michael O'Leary, the CEO, joins us around the table. Michael, good morning.
John, good morning. Great to be back in New York.
Good to see you, sir. Have you spoken to Kelly Ortberg?
I spoke to Stephanie Pope on Friday afternoon. So she's reasonably hopeful that the vote on the new pay deal will be approved tonight. It doesn't make a lot of difference to us one way or another because we're gone into the winter now anyway. The big issue for me was how's the certification of the MAX 7 and MAX 10 going? I think the good news is the strike hasn't delayed that certification work. Management are still working certification. She still expects the MAX 7 to get certified first half of 25, MAX 10 second half of 25. So I think we're still good to go on the first of our MAX 10 deliveries in spring of 2027. And that's what really takes us from our 200 million now to 300 million passengers by the mid-2030s.
How are these delivery delays hitting your company? Just give us an idea.
I mean, they've been very frustrating. We were supposed to grow to 205 million passengers this year. We'll do about 199 and change. Next year it was 215 million passengers. We've now cut it back to about 210. Might get to 208, 207. So it's frustrating. But in a bizarre way, it might actually help our earnings next year because, we'll be heavily constrained in terms of our capacity growth. We had a bit of a disappointment on pricing this summer. After 2 years of 20% fare increases, this year we're down 10% in the first half of the year. But with real capacity constraints next summer, with interest rates easing, inflation no longer a worry, I think there's a reasonable rebound in consumer spending next year. And we hope to see that reflected in modestly upward fares, which with Ryanair's very stable cost base will flow largely through to the bottom line.
So you could see another 10% maybe fare increase next year?
I wouldn't want to put a number on it, but I mean, I think off a 10% decline this year, I think it's reasonable to expect next year that, fares will be up. I would hope we'd recover most, if not all, of this year's 10% fare decline.
So why were fares down earlier if there still is all this pent-up demand for people to travel? Why has that been such a soft patch for airlines across the world?
Well, I think this year, certainly in the first half of this year, the consumer was under real pressure in Europe. You had high interest rates, the central banks really squeezing down on inflation in the first half of the year. We had an unusual event ourselves. So we had this dispute with the online travel agents started last November. They boycotted us from November, December. I think that hit us this year on pricing. We lost a lot of the kind of the advanced bookings of summer holidays. People who book well in advance using those OTAs, they moved towards the tour operators. We've now signed up approved OTA deals with about 90% of the OTA customers, and we're seeing very strong forward bookings into summer 2025 as a result.
There's a larger question here. If you're depending on Boeing to come up with some planes, you're reading the news about the strike, you're talking to executives, finding out the blow by blow about when they can actually get back to the floor and produce again. Do you have an alternative? Are you looking at alternatives? Are you thinking to yourself, really? Am I really doing this again?
I mean, the honest answer is no airline has an alternative. There's two manufacturers in the world. You've got Airbus and you've got Boeing. Boeing gets all the negative PR. They have the strike. They've had the MAX grounding. Airbus are in as much of a mess as Boeing are. I mean, Airbus are way behind on their monthly production. The engines, the Pratt & Whitney engines on the Airbus aircraft are duds, so they're taking them off the wing. They're going through 12-month repair processes. Europe is an Airbus marketplace. So Airbus are just as bad as Boeing are. I'm very happy to be a Boeing customer. I think the Boeing aircraft is a better aircraft. The newer aircraft we're taking now, the game changers, we're carrying 4% more passengers, but burning 16% less fuel. That's transformational to our numbers. You look at our numbers this morning, and in a summer where we carried 9% more passengers, unit costs are flat. We're the only airline with flat unit costs in North America or in Europe here this year. Yes, we've taken a bump on fares. I think that's good. If your passengers are getting lower prices, yes, we'll take a hit in the short term on profitability, but we're taking huge amounts of market share off everybody else. And next year, if I think we see a bit of a bump upwards in airfares, I think it'll come straight through to our bottom line.
Michael, do you think third time's a charm? Will this deal that's on the table right now get through?
I mean, again, I think Boeing's might call on Friday, they think it's 50-50. I mean, very hard to see how any Labour group turns down a 38% pay increase with the ridiculous sign-on bonuses. I think on balance, I think they probably will turn it down. I think they'll hold out for 40. But it's a short time. Like, this is a frustration.
Will Boeing go to 40?
If they turn down 38, I don't know, where else do you go? They're not going to go backwards towards 30. I hope it's resolved this evening, whether it's 38 or 40. I think we're at the end game. It doesn't make much difference to us. I had 9 deliveries due in November and December. They're going to get pushed out into February and March. The big issue for me, Boeing's supposed to deliver me 29 aircraft before June next year. I think now we're looking at only getting half of those, so about 14 of the 29 aircraft. So I've had to walk back my growth next year. Instead of 215 million passengers, it'll be 210 million, and that number might creep slightly downwards. So it's frustrating. But really, over the medium term, the big issue for me is Boeing. When are you going to get the MAX 7 certified? When are you going to get the MAX 10 certified? If they get those certified in 25, we're looking at taking delivery of an aircraft in 2027 that carries 20% more passengers but burns 20% less fuel. I just blew up the entire competition in Europe. No Airbus aircraft will be able to compete with me.
I want to ask you about the competition in the UK. I used to live in the UK, I used to fly on Ryanair. Now You're reviewing your schedule out of the UK because the government is charging £2 more a person.
I mean, you have this bonkers Labour government. You know, they got elected on this kind of we're going to be pro-growth, we're going to grow, whatever it is, we're going to grow. And the first thing they do on an island on the periphery of Europe is we're going to put up travel taxes. You can't grow putting up
So
travel
will you
taxes.
cut capacity?
We're going to switch it. I mean, we do about 55 million passengers a year to the UK. We're going to switch about 5 million of that capacity, which mainly takes place on aircraft that are based in Europe that fly into the UK. We're going to move that now next year to Italy, Sweden, Hungary, where they're abolishing travel taxes. So we have the flexibility to move that capacity around. And again, I think it'll be good for my pricing in the UK next year. Bad for growth. I mean, the UK has no chance of growing if this idiot chancellor thinks that the way forward is going to be increasing tax on air travel. You want to grow, scrap air travel taxes. The Italians get it, the Swedes get it, the Irish got it. The Brits will eventually work it out. But, you know, these guys haven't been in power for about 15 years, and I think they're going to learn some very harsh lessons in the next year or two.
I asked you if you've spoken to Kelly Ortberg. Have you spoken to Chancellor Reeves?
No. And I suspect the chances of me having a conversation with her in the next couple of weeks would be are diminishing rapidly. You know, like, I mean, this is a girl who, you know, her background was in the Treasury. She should understand that the way to, you know, you really want to deliver growth in the UK, particularly in the regions. Tourism is the one industry you can turn on and turn off at the drop of a hat. And her first measure is to increase travel taxes. You've got to be insane to do that.
When you do that, Michael, £2 on short-haul travel per passenger, grand scheme of things, you step back, you say £2 might not sound like a lot. From your perspective, you're fantastic with the numbers. Walk us through how £2 changes the game for you. How does that ripple through the system?
See, the point is, it's £2 up in the UK, but in Italy at the moment, they're reducing the municipal tax. They're scrapping municipal tax, which is a reduction of €6.50. So on all of that, the move now is €10. So do I put another flight into Italy next year, or do I put another flight into the UK? I move capacity out of the UK into Italy. Sweden, Sweden, the home of travel, the home of flight shaming. Greta Thunberg, where she got her limited education up there, have now scrapped aviation taxes. There's a new right-wing transport minister of Sweden who gets it. Greta was wrong. She should go back to bloody school and stop boycotting school. They're scrapping the travel. So if I move an aircraft from the UK next year, it's not a £2 differential, but if I move that up to Sweden, it's a €10 differential. And that's transformative. If I can lower my fares to Sweden next year by €10, I will carry many more passengers to Sweden. I'll carry fewer in the UK. Airfares in the UK will rise. Regional traffic and tourism in the UK will fall. Sweden will boom. Italy will boom until Rachel Reeves works it out that this is not the way forward.
Michael O'Leary, continue the conversation if you like, if you want to stick around. It's good to see you.
John, Lisa, and Reid. Lovely to see you all.
Thank you so much.
Come back to Europe. We need you.
The Ryanair CEO, Michael O'Leary. Coming up next on this programme, Stephanie Roth of Wolfe Research and Saira Malik of Nuveen. And maybe Michael O'Leary if he wants to continue and offer some comments on the presidential election stateside.
I'm just looking at attractions in Sweden. The ABBA Museum. We could all go to the ABBA Museum together.
We're flying to where?
Yeah, Stockholm. Love it.
Equity futures right now on the S&P positive by 0.1% from New York. This is Bloomberg. I asked Michael if he wanted to stick around and share his thoughts on the US election. He politely declined, and I think we're all slightly disappointed because he had things to say.
He pushed his chair back like this and said, I think that I'll pass on this
Until next time. Equity futures on the S&P 500 right now firmer by 0.1% with 1 hour away until the cash open. With your morning movers, here's Manus Cranny. Hey, Manus.
Jonathan, very good morning. Yeah, we had a private conversation on what he really thought about the American election before we came into you. I thought we'd kick off with a little bit of a Trump top line on this. Of course, it is Trump media. Down 2.5% this morning, down 35% last week. This company's still worth $6 billion on a 3,000 times annual sales and $1 million of sales. Sorry, $1 million of sales, 3,000 times its annual sales value. But of course, as the bond market tries to understand the unwinding of what a Trump trade is, it just percolates into that vehicle. Constellation Energy, this is a conundrum, raising their guidance for the year to $8, $8.40. This is on the nuclear production. So they had a real boost from their deal that they did with Microsoft. We're up 26% from there. Then why are we down 8%? because the Federal Energy Regulator has just blocked a deal between Amazon and Talon Nuclear. And this really readdresses the entire stage for nuclear, feeding into some of the big hyperscalers and those kind of deals that we've seen being done recently. I leave you with Marriott. Again, using words like normalization. The leisure transient RevPAR is flat, but still above where the pandemic is. We're down 2%. There was slippage on the guidance. They're going to make $9.19 to $9.27, less than the market had anticipated. And the RevPAR here in the United States and Canada is just below the level estimated by the market, 2.3%. It comes in at 2.1%. Asia and Europe doing mildly better, but the core here in the US lighter than had been estimated.
Manus Cranny, appreciate it, sir. On the equity market, let's turn to bonds and take a look at things together. The 2-year, 10-year and 30-year yields declining by, call it 10 basis points on a 10-year this morning. Lisa, 428.67.
Yeah, Jumpy, responding to that poll that we saw over the weekend in Iowa, a real edge suddenly in the betting markets that Harris could potentially win. And that's really the opposite of what we had been seeing for a number of weeks. I do also want to just say, given how volatile, the fact that we're seeing benchmark bonds trade like penny stocks on any given day gives you a real sense of just how much uncertainty is baked into this market. And you add on top of that the auctions of this week, and I know I always focus on the auctions, but this week they are front-loaded and bigger than usual. $58 billion of 3-year notes today. That one's going to be fine. $42 billion of 10-year notes tomorrow. That'll be interesting. And get this, $25 billion of 30-year notes on Wednesday. When we get a result and you already have a messy market and we're talking about long-term bond yields, it should be interesting.
Great timing. Let's switch up the board and get to foreign exchange as well. Yields lower, so yield differentials playing into a stronger euro and a weaker dollar. Euro-dollar, 108.95. And then you've got the trade story around the president. See, that's playing into a stronger Mexican peso. So dollar mex down by 0.8%. A weaker dollar for a couple of different reasons across foreign exchange.
Yeah, and really it has to do with the rate story. It has to do also with the tariff story, which we're going to get more into in a bit. But that's the reason why the peso has gotten such clout. I do wonder how much this is also getting skewed because people have gotten sold baskets that are the Trump trade, baskets that are the Harris trade. And so we're all looking at these baskets and people are piling into these baskets, and it sort of is unclear exactly what the policies are going to be and how it will play out over a longer period of time.
Financial markets for the past week or so, even longer, have really been Trump trade, Trump trade, Trump trade. Jay Ann Seltzer comes out over the weekend and says, hold my beer. You might be wrong, because I have Harris up 3 points. In September, she was down 4 points to Trump in the same exact poll. And then back in the summer, it was double digits in terms of how much Trump was winning that state. Cook Political Report has this state as solid red, but she's seeing something right now in this early voting and in this part of the electorate that maybe is foreshadowing what could happen in neighboring Wisconsin, which is part of the blue wall.
Something you might see developing through Tuesday night into Wednesday morning. Let's talk about the Trump trades. Investors walking back bets on a Trump win as the latest polls give Harris a slight national edge within the margin of error. Stephanie Roth of Wolfe Research weighing Trump's economic plans, saying tariff policy is one of the most underappreciated risks of a Trump administration. Although CEOs are worried about the potential impact of tariffs, they aren't doing anything about it yet. Stephanie joins us now for more. Stephanie, welcome to the show. Just elaborate on that a little bit more, because we talk about tariffs every single day. What is underappreciated about it?
Well, a couple things. One, if you look at imports from China, you certainly haven't seen companies front-loading that, right? If you ask CEOs, they say that's one of their most concerning risks out there, but then they haven't actually been stockpiling as a result. And then if you look at some of these Trump baskets, especially the ones that are impacted by tariffs, they've moved a little bit, but not truly pricing any sort of significant tariff risk.
What do you think the economic consequences would be?
So the way we're modeling it is about a 1% hit to GDP, 1% boost to inflation. And that's in a pretty modest scenario, one where if we got China tariffs up to 60%, you would have a significant reduction in terms of imports from there, in which case that would mitigate a lot of the risk.
So what's the argument? How much credence do you give the argument that if you put tariffs into place, you actually see growth come down? Because activity really declines. We saw that with the washing machine example. When Donald Trump was president, tariffs on washing machines, and people bought fewer washing machines, and they didn't really need to upgrade. I mean, how much is that going to be what we see with tariffs also, which makes this harder to model?
So if it ends up being just a 60% tariff on China, we can kind of mitigate that to some extent. You would see a significant reduction in terms of imports from there, and we would see goods, pick up elsewhere. If it ends up being a 10% across the board tariff plus a 60% tariff on China, that would be a headwind on growth. So that's that kind of 1% hit to GDP type of scenario, and it could be even worse. This is a stagflationary type of policy. It's not good for economic growth.
How much pushback do you get from people saying Really? You take these seriously? You think that this will actually could be policy rather than just a negotiating tactic?
Yeah, people say that all the time. Well, it won't be that bad, or, maybe it won't happen. It'll be negotiating. But we have, he did it the last time, and we have to take it seriously. Granted, the one thing to keep in mind, though, is we don't think it will happen until later 2025. So when we're thinking about the next year and Fed policy, that's probably not going to be a real conversation for next year. This is the 2026 kind of thing. And by the way, the Fed can't really forecast these things, so they're going to have to just take the data as they come.
Right, which is a reason why people are wondering if there could be some sort of inflationary shock later on. A real question about whether it's really 10% across the board or whether there are certain areas that could get penalized more than others, with a real focus on Mexico. This is the reason why the peso has been such a focal point for traders. Do you believe that that is truly the case, that Mexico could be sort of the focal point of a lot of these tariffs, since they are the entry point of a lot of Chinese goods into the United States?
Yeah, so it's possible the 10% would look a lot less across the board than as he initially talked about, right? So we might see something like Mexico would see bear the brunt of a lot of this. And probably what happened after the tariffs got put in place on China is goods shifted elsewhere. So Mexico, and then they shift it back over to here. So I think that's totally fair. And it's probably not going to be ultimately a 10% across the board type of thing, because that would be really, really negative for growth. So we would probably see something significant on China. And then it would depend on which country, and then the tariffs would certainly impact Mexico in particular, and then perhaps a little bit on Europe too.
If you're looking at a country like Mexico, though, we had NAFTA. Donald Trump came in, ripped that up, have a new deal, USMCA. They're going to go back to the drawing board and look at some provisions in that trade deal in 2026. Given the fact that you think you might see some serious tariffs, do you think that deal then is basically over between Mexico, the United States, and Canada? Or how much harder will Donald Trump come in on that specific USMCA?
Yeah, I mean, that's certainly a tough one. And I think the Mexico one is obviously the more challenging point here. And by the way, it's interesting because a lot of clients come to us and ask if Mexico might be the beneficiary of some of this, given that you're going to see significant tariffs on China. So there's so much up in the air right now. Our base case is that you'll probably see something significant on China. Mexico perhaps could be, the next country most at risk here. But also keep in mind, Trump really does care about stock markets, right? So if we do see a significant negative impact, I think that's going to matter too.
We have seen that as well during Trump 1.0. He did come out, say something, and then quickly reverse because of how the Dow Jones Industrial Average acted. When it comes to tariffs, though, as well, the Biden administration kept some of those on from the Trump administration. How much of an impact have those tariffs had on growth?
They haven't been all that impactful. And one key reason as to why is because the goods that saw a 25% tariff on China fell by 25%. So you actually did see either whether it's companies skirting the tariffs or just moving production elsewhere. That's one reason why it actually mitigated a lot of the impact, because the goods that received the biggest tariffs did see a significant deceleration in terms of our imports of those.
We have to consider starting conditions and the labour market. Let's finish there. We'd love your opinion on what happened on Friday. You were looking for a soft print. At one point, it was the lowest in our survey, not low enough. You were about 70K?
Yeah.
Is that right? 70K. Big downside surprise on payrolls. Just how noisy was it?
Oh, man, what a noisy print. So, like you said, we expected a lot of noise, and it was significantly more noisy than that. I don't think we should take much from that print. I wouldn't look at the 3-month average and make any significant conclusions. We certainly saw a big impact from weather. There was a big spike in terms of people who were not at work due to weather. So kind of across the board. The message that I would take away is the labor market is fine. We're looking at a payrolls trend of somewhere around 150,000 in terms of overall numbers. And the unemployment rate did tick up. We think that's probably fair, increased 9 basis points, something like 4.1%. And then it's going to depend from here on out in terms of immigration policy. That's going to be an important one. So going back to the election again, which you were kind of steering away from, but it's important to note.
All roads lead there, apparently, yeah.
All roads do. So it's important to note that in a Harris administration, we're going to be having supportive immigration policy that we might not really need, because we don't really need that much more supply of labor. So she could actually be disinflationary. Trump, I would say, would be inflationary, but perhaps a little bit less so than what people fear from that perspective.
Or perhaps stagflationary, based on some of your forecasts and what tariffs could mean.
Stagflationary from tariffs, less so from immigration.
OK. Stephanie, it's good to see you. Stephanie Roth there of Wolfe Research. On the labour market data on Friday, which ended up in a couple of Republican campaigns on Friday as well into the weekend.
It was instantaneous, at least on Twitter, from the Trump campaign when 12,000 was the print, and they called it, quote unquote, brutal. There's no nuance in an election cycle, especially just days out from November 5th, for them to explain that this was hurricanes and this was Boeing. They just were going to take that headline and run with it.
Of course. In some respect, it's fair game because the Democrats have been running around counting the pandemic losses, the job numbers back then, as Trump's own and things that he has to own, even though we know that it was a pandemic.
I kind of think Michael O'Leary stole the show today because he told us about Sweden. And the more that we talk about this, I'm looking at the scenic Swedish archipelago.
Oh, you're moving to Sweden?
And I'm looking at the high coast.
Is that the new Canada?
I think so.
Do you remember that?
Yes, exactly.
People were moving to Canada and they never did.
There is this feeling that people cannot wait to see the backside of this election and that, you know, there are a lot of ways to parse it and how you're going to use it on a campaign trail.
Look at tax rate in Sweden and then tell me where you want to move.
Okay.
Well said, AMH. Is this the promo for tomorrow? People just want to see the backside of this. Saira Malik of Nuveen joins us now for more to talk about the election and what it means for financial markets. Saira, what are you doing going into tomorrow? And I know it's super short term and super tactical, but given where this market has been, how are you thinking about the price action beyond Tuesday into Wednesday and through next week?
It's good to see you, Jonathan. Well, the stakes are high this week for three reasons, and that's the Fed earnings and the election. So let's start with the two perhaps more certain ones for the market. For the Fed, we expect 25 basis points, even with that 12,000 payrolls that we saw on Friday. Earnings have been strong. There's optimism there. Estimates did come down going into earnings seasons, but we are growing at about 4 to 5% year over year, and about 3/4 of companies are beating earnings. Now, going to the election, I think we're going to see caution with the markets, more of a defensive trade. First of all, markets don't like uncertainty. And we keep talking about which candidate will win, but we also need to talk about when will the candidate win. I think there's a reasonably high chance that we have a contested election, and we don't have an answer to who our next president is for days and perhaps weeks. In the year 2000, it took 24 trading days to decide who our president was going to be, and the markets were down about 4 to 5% during that period.
What kind of market volatility could we see if that happens this time around?
I think, first of all, the markets have been starting to pre-price in Trump winning. So we're seeing today a bit of that unwinding because of that poll that came out of Iowa. So markets have started to price this in. This is unlike 2016, where markets were surprised by his win. So we're seeing that start to unwind a little bit. And then I think the issue of who will win is going to cause the markets to just go into more of a defensive mode. We're also in a different period. Today, S&P 500 valuations are at the third highest level since the year 1999. So 1999, we had a S&P 500 valuation higher than today, and in 2021 we did. And we know how both of those periods ended. So this is not a cheap market that's going into quite a bit of uncertainty over the next few days and weeks.
You mentioned the Des Moines, Iowa poll. What do you make of that and its impact on financial markets? There's been no data, just this one poll coming out of a state that many view as solid red.
Well, markets keep trying to trade off of the polls. And as you've seen, they've been very tight. And there's a lot of uncertainty around polls, which markets have learned the hard way in recent presidential cycles. So I think it's just very challenging at this point. I think what we can assume is the race will be tight. There may be disagreement over who wins the race. There could be a delay in figuring that out. That's going to bring a period of days or weeks of uncertainty. But eventually, markets are going to move on from the election, and they're going to focus on two things for the next president: taxes and tariffs. And what do those mean for the economies? We heard a bit about that from the prior guest who was on. So markets will eventually move back to fundamentals. So that's why, I would say, even though we're cautious going into the next few days and weeks, over the long term, we will be focusing more on earnings growth and really what's going to drive this economy going forward, which will be employment, the consumer, and inflation issues.
That's the earnings side. That's the equity side. You say back to fundamentals, and it raises this question: the new normal, is it with bonds as a ballast, or is it with bonds as a risk asset? And that's a real question, because so far in this period of uncertainty, bonds have actually been the center of the volatility and expected volatility going forward. Is that the new normal we can expect after the election?
Well, we've seen rates back up in credit, and that's because people are looking at Fed rate cuts and assuming they're going to be less than what we'd hoped for. The economy remains strong, and that's caused fixed income to struggle a little bit. But we think this is a period where areas of fixed income where fundamentals are strong, like municipal bonds, where state rainy day funds are very strong and their saving rates are high. This is where you can start to lock in yields. There is a lot of cash sitting on the sidelines, and we expect rates to go down for cash going forward. So your return's going to deteriorate. You can take incrementally a little bit more risk and start legging into bonds and locking in some yields at this point in the areas that are strong, such as municipal bonds.
You said that stocks seem expensive at a point of such uncertainty. Don't bonds seem pretty expensive too? I'm talking on the credit side, on some of the riskier side.
Well, I think it's challenging. We're not looking to take more duration at this point because of what's going on with the economy and also our forecast we think that the 10-year got a little bit too optimistic on the downside. And now I think it's a little bit over 4% is a little bit too negative in that sense in terms of where it can go. We see that trading in a range. So we're not taking on more duration here. We're looking for those areas with strong fundamentals. I mentioned municipal bonds, also preferred securities with the backings of banks. So you need to be selective there, but there are areas where you can leg out of cash and leg in and lock in some strong yields at this point.
Saira, always appreciate catching up with you. Just one final word on single names. You usually offer some stocks. What are the ones you like right now, given everything you've just said?
Well, I'll be watching closely today. We're not huge. I'm not hugely bullish on it, but looking at Marriott today just to get a glimpse into the consumer and spending on travel, watching for corporate travel and how much room growth they can grow next year. I think that they're going to report before the open, and they're going to give us a good view into what's going on with the consumer and travel.
Saira, appreciate it. It's good to see you, as always. Saira Malik there of Nuveen, thank you. With an update on stories elsewhere this morning with your Bloomberg Brief, here's Danny Berger. Hey, Danny.
Hey, John. Striking Boeing workers will vote today on the company's latest contract proposal, a 38% wage increase over 4 years. That's up from their prior offer of 35. It also allows union members to take a $12,000 bonus as an immediate cash payment versus splitting the funds between a $7,000 immediate payment and a $5,000 contribution to their 401k. The workers have been on strike for more than 7 weeks after voting down the prior two offers. Elon Musk is facing a setback in court. A judge ruled that former Twitter CEO Parag Agrawal and other top officers can move forward with severance claims. They're accusing the billionaire of terminating them just as he was closing the deal to take over the company in order to cut them out of severance pay. Musk has been fighting legal claims for back pay by thousands of Twitter staff members that he let go. And the Minnesota Vikings are keeping their pace with first-place Detroit Lions in the NFC North after beating the Indianapolis Colts on Sunday night. That game capped off a full slate of NFL action on Sunday. The Bills won their fourth straight game and increased their lead atop the AFC East. The Commanders beat the Giants and hold a one-game lead over Philly. And tonight, the undefeated Chiefs look to keep their streak alive against the Bucs on Monday Night Football. And that's your brief, John.
Danny, thank you. Appreciate it. Up next on the programme, we'll set you up for the day ahead and we'll head over to Philadelphia, Pennsylvania in just a moment. From New York, this is Bloomberg. The open about 39 minutes away. Equity futures still positive. And that bond market still bid. Yields down by almost 10 basis points. The 10-year, 428.67. As we count you down to the opening bell, here's the trading diary for the week. Today, durable goods orders due out at 10 a.m. Eastern Time on Tuesday. The presidential election on Wednesday. PMI data that nobody will notice. On Thursday, a rate decision. I hope they will. On Thursday, we'll get a rate decision from the BOE. Another round of jobless claims, plus the Federal Reserve rate decision too. And on Friday, UMich consumer sentiment. Tomorrow, of course, election day, and both candidates are making their final blitz in swing states before polls open nationwide. Bloomberg's David Gura joins us now from the battleground state of Pennsylvania in Philadelphia. David, we've had the final polling for a lot of organizations over the last few days. What's the read for where you are?
Yeah, so here in Pennsylvania, the poll that's getting the most attention is this New York Times Siena College poll. We've seen them over the course of the campaign. And what it shows is in Pennsylvania, the race here narrowing even more. It's essentially a tie. And that's true at the presidential level. And then you look at this kind of big Senate race that's taking place here, too. Bob Casey, the Democratic incumbent, going against David McCormick, son of Pittsburgh, who spent some time at Bridgewater in Connecticut, now making a run for it here. He used to have it was losing by 9 points. Now it's 5 percentage points. So it's narrowing as well. And I think that what that indicates is just how important this state is going to be for both of these candidates. Indeed, both of them are going to be here today. Donald Trump is hosting 2 rallies in this state. Not to be outdone, Kamala Harris is hosting 3. She's going to be in Pittsburgh and then Allentown and then Philadelphia, where I am at the end of the day. And it's, again, one of these sort of large, star-studded, celebrity-rich events that's going to attract a lot of attention here locally. You mentioned polling. There's one other that got a lot of attention. That's the Des Moines Register poll that Anne Marie mentioned just a few minutes ago, indicating that Kamala Harris has this lead in Iowa. And I think that kind of raised a lot of eyebrows on both sides of the aisles. The Democrats were quick to capitalize that as something that kind of indicates that maybe things are going better than a lot of these other polls are indicating. For the Trump campaign, I think it was a moment for them to kind of look at their own internal polling, tout that, say that it's so far off they can't believe it. In kind of classic Trumpian discord, the person who runs that poll, Jan Seltzer, is somebody that Trump has praised previously. So something of note, I think. But I think the real focus here is that last swing state poll from Siena College and the New York Times.
Right, because she predicted his prior wins in 2016.
Correct.
David, I want to focus in on one issue in Pennsylvania. Oxford Economics said that if the issue going into the election is inflation, Trump wins Pennsylvania by 90,000 votes. If it's something else, Harris wins with an almost similar level of votes. What is the final salient issue going into tomorrow?
I think it's the economy, and I think it's just how the Harris campaign is able to reach those voters who feel, as you indicate, that maybe Trump is handling this a little bit better. But it's interesting, I've been here just fewer than 24 hours, but the level of sort of signs and advertisements focusing on the economy is certainly huge here. And, I kind of listened over the course of the weekend to what the closing arguments were from both of these candidates. And I'll start with Donald Trump. There's kind of this very streamlined message that I think his advisors wanted to tell. That is, Kamala Harris broke it, Donald Trump can fix it. And we saw him kind of meandering and wandering away from that over the course of the weekend. Kamala Harris in her presentation, yes, nodding to the economy and sort of how she wants to help middle-class voters in particular, but trying to once again welcome voters into this big tent that she has set up, while all the while nodding to the fact that she thinks that Donald Trump is not a stable or competent candidate who could be president once again. So it's interesting to see sort of how this shakes out. Sure, you were listening over the course of the weekend, too, to the things that Donald Trump was saying. He, again, wandering very far away from what was like a very concise and streamlined message that I think his advisors rightfully think would be very salient with voters here in this state and others. We know the economy is such a marquee issue for so many people in this country, not just in Pennsylvania. I think it is going to be the thing that the state and others hinge on.
He has struggled to stay on message at times. David, good to see you. David Gura of Bloomberg in Philadelphia, Pennsylvania. 24 hours, Lisa, of closing arguments still to come.
Yeah, although I don't know how many people are actually listening to the closing arguments versus just deciding whether or not to vote. I'm not sure exactly how many people truly are undecided. The big question, the big star to me, is just how wrong are the polls? Because that, I think, is what a lot of people are looking at in such a tight election.
Who are they underestimating? You have to remember, in the midterms of 2022, Republicans were feeling real good. They were talking about massive, huge tsunami of a wave. And that didn't happen. That's because of abortion. So potentially, that is where that's their big vulnerability.
This is going to be a very long week. Tomorrow morning, here's the lineup for you. Julian Emanuel of Evercore, Sarah Hunt of Alpine Saxon Woods, Neil Dutta of Renmac, and Kelsey Barrow of JPMorgan. From New York City this morning, good morning. Thank you for choosing Bloomberg TV. What a week still to come. This was Bloomberg Surveillance.